Good morning. It is July 5th, 2023. Hope you had a good Independence Day. We're going to be streaming stocks, options, futures trading today, and looking at technical analysis, doing some theta farming, looking at the FOMC, all that stuff. Sub up, like up, comment down. Happy money sticks around. Yeah, it seems extra loud this morning. There we go. Hope you guys had a good 4th and good Independence Day. We had a fun time here on the 3rd. Good time celebrating the eve. So we'll get a look at stuff. Looks like Rivian had earnings, and it's up a bit on that. Kind of interesting. Vulcan's up 5%. Buy came down quite a bit, 0.43. So my short in the futures like that. My long theta farm probably doesn't like it very much. Barbecue had a nice send off into the holiday. I think it should be able to continue its trend back up to that 38-cent range to start that previous high we made. And then I'm hoping to break that and fill that gap, and maybe that could all happen this week. Yeah, getting closer to being green on those futures. That is neat. Ragged coal. Good morning. I'm not bullish on it. TA wise, it's not looking very bullish. Fundamentally, yeah, I think it's a safe bet. I also think it's done with its cycles, its pinches. So bullish in the sense of a good trade to make crazy gainers. Probably not. But long term, I think it's a still solid hold. It's probably valued a little high for where the market is right now and what it's doing. So I think some growth is priced in already, but I can't speak too much to that. Yeah. Yeah, the chart is so weird from the last 2 earnings. It's kind of a mess. Happy 5th, Ace Ventura. Happy 5th, Aware. Good morning, Mo Lava. Good morning, Aware. Good morning, Ace. Good morning, Access. Good morning, Nor. K is silent. Let's go barbecue. Good morning, Buzzin. Pre-market, I don't know if that's actually pre-market though. Are you getting that from CNBC or what? Yeah, E-Trade's saying up 8% to 325. We'll see where it opens. We've seen that say it's gapped up or gapped down, and it hasn't. More often than we've seen it say it's done that, and then it has. I think the only time I did see it was the other day when it gapped down like 10% or whatever. Then it immediately ripped up. But yeah, I mean, if you didn't watch last week, I went over the TA. Barbecue's definitely looking bullish. It looks like it's making this handle, and it's already made the bottom of it. Got this inverted head and shoulders here now. So yeah, 38. I think this high here is well underway, and just see if we break that. I think we could, but yeah. Oh, that's you passing cloud. Rob me Hood? That's what Robinhood says? It gives you pre-market numbers on Robinhood? You can't even, like, can you even buy barbecue on Robinhood? For some reason I assumed you couldn't. The Twitter forwarding on Discord isn't working still. They changed their API and TweetShift is working on it. So yeah, that's what's going on with that. Australia ties Google to tax leak scandal. Like Tesla and BYD, Volvo cars post huge spike in electric vehicles. Foxconn stock falls as iPhone makers' sales plunge in June. Musk and Zuckerberg's real cage fight is in the stock market. It's a lot closer than you think. I wonder if they're going to actually do that. I've got about 5 minutes to open. We do have FOMC today, which probably be a market mover. Factory orders at 10. FOMC is at 2. And then Williams speaks at 4. So 10 o'clock and then 2 o'clock are catalysts. Let me check on. If you guys don't know, on our Discord, StockBot commands, you can type in any sort of thing. You get borrow fees, prices of stock. There's a huge number of things you can just ask this bot to do and it'll give it to you. To get the list, I can't remember how you get the list. I think you go to Open BBBot. I'll tell you the list of them. One thing I use on here is the econ calendar. Yeah, look, econ calendar, econ commodities, econ currencies. It's like Fed rates, reverse repo. It's like the US bonds. It's crazy. Econ calendar, one thing I use on here. Red book at 8:55. That's okay. Yeah, factory orders at 10, and then durables excluding defense, durables excluding transport, factory orders 10, FOMC at 2, Williams at 4. So it has basically the same stuff. And then on the SPY, I think we're starting to complete either a double top we just have endured, or this is a cup and we're going to make a handle now. So I think at any rate, we're probably going to come down and fill this gap either for a handle or for a double top and on our way down. So that's why I held my shorts through the last few days of trading. Just anticipating that. And yeah, here we are. We're already gapped down 0.44%. So typically handles on cups are 50% or less. There is a gap to fill down there too. Yeah, so 50% literally is right at that gap. So if you get a gap fill, and I have that other day, 43.70 or 437.80, 437.8, that will be a full 50% retracement and a gap fill, somewhere right around that range. So I'll be looking around there to see if we start to change direction to go long. Otherwise, I'll be short until we see that anyways. But that would be the last stop to close the shorts and go long if it shows those signs. Of course, you have them stuck there. Can you buy on Robinhood though, or I mean, I'm sure you could hold them there. Yeah, we did. Yeah, it was kind of like an extended weekend, little week holiday. Good to hear, buzzing. Good morning, Bruce. I didn't know you were in the UK, man. I did see what in the German market after we closed, barbecue did rally up quite a bit. That was interesting. Yeah, like 50 seconds to go here. I went in pretty. Yeah, I'm fully into barbecue basically. And I got in some this day and some this day. I wanted to see this to get more into it, which was this inverse head, or this shoulder over here on this inverse head and shoulders, and a break of this downtrend. Kind of see this downtrend that stuck. We broke above it and held above it. All good things. All good things. No buys, just holds. All right, so let's see. So E-Trade's now saying it's up 2% barbecue, so maybe it does actually move that much in pre-market, but by the time you get the bell, it's usually pretty close to back to close the day before. Ding, ding, ding. Where are we at? Showed flat initially, now it says up 1.8. So yeah, maybe a 1.8 gap. 30.75. 30.88. 2.25. Spies green out of the gate. I'm going to be very patient on SPY plays today. I have the futures already, but for any daily options, got to give my brain, give my emotions some time to get back into where they need to be after this last 4 days or so. So I'm going to try and be patient with that. But yeah, I'm looking for, I guess I'm looking for short opportunities at this point. So with that, maybe even taking a short right here. If retesting the high of pre-market. What did I say about patience? Barbecue, there's 3% on it, 3,100 or yeah, 3,100 cents. Oh, 3,150. It's up 4.3. Iron Net's up 10. I'm just flashing around though. I sold Iron Net for barbecue, which I think I'll be happy with still. Barbecue's made all the signs I wanted to see. Mullen's up 5. Maybe I'll just get a few more days on the SPY options. Get like Friday's expiration instead of dailies. It's more flexibility. So much for yeah. I was like thinking about it. I'm like, wait, I actually want to look for a short entry, and here we are. Right at resistance. Okay, good. Yeah, go. Barbecue rallying up there, 31.87, up 5.5%. I've got a gap here at 33 cents. Resistance, was it 35.70? Is that kind of a big one? I think so. Let's see. Yeah, that's the high from the previous OTC high. So that'll be a big resistance there. Not necessarily big, but that's the first major one from where we are here. We pretty much got clear skies up to that level. Yeah, see the volume kind of indicates it too. Not to say there's a lot of resistance up here, but just being that was the previous high, you might see some resistance. $31.84, up 5.4% on barbecue. Crabbing down today? I don't think it's crabbing down. No, I don't know that actually. Good morning, lords. Morning, CDB. Happy. SPY just green out of the gate. I wonder if I should sell these beyond calls. So I'll have 16 days on them. Could just keep farming them, I guess. GNRC down 4. FOMC, yeah. Hey, good morning, Tyler. Guten Morgen. Zoom's down 1.3. Teledoc's down 1.4. For solar, down 0.5%. Fisker's down, or up 0.5%. Joby's consolidating up here. It's pretty much flat. Quite the rally on Joby once they got that FA approval. Moose, it's down 0.5%. Pretty mellow. IronNet's actually holding that. Barbecue 31.74 up 5%. DWAC up 13%. 13.8. Yeah, I wonder if this will start to rally if Trump is going to run. Let's see. Partner of Trump's social media company proposes $18 million settlement to SEC. Oh, that's why it's rallying. They reached agreement, or the SEC maybe. Oh, that's right, because they had the there was something about their SPAC deal. That's probably what's causing that. IRNT. Yeah, I mean it could still be good. I didn't like that it broke that trend last trading day, but yeah, liked barbecue's chart better. It's looking good. 31.74 up 5.10% on barbecue. GME's down 1.3. Still kind of making this right shoulder. Got Moderna's up. Miss Fresh, Jeff Brands. Jeff Brands is up 10. SPY, their new high on the day. Hello, Gerard. I am in Rivian. No, I'm not in Rivian. I did some cash clear puts on it prior. It's at a nice resistance now to take a short though. Well, what started this rally? I can't remember. Something. Oh, delivery numbers? Okay. I do want probably a longer term short on Rivian. I mean, this market cap is silly. And it's right at a resistance, so we'll be patient. Might look to open something up today on it though. Why is barbecue tanking this week? Baby will be delayed. August comes into October. Another decade go by. I'm just looking at the TA and think it's not going to come down today. Crab walk down, as you put it. As far as fundamental catalysts, yeah, they're pushing those back. Honestly, it's not a huge deal to me because that's either the sooner we make a lot of money or the sooner that we lose a lot of money. So I want to trade this as much as I can before we have that catalyst. That's kind of how I look at it. You know, it's an OTC. There's a lot of potential either way for it. So once that deadline is there, then this is done. You won or you're lost. So I'm fine with them pushing it back as long as it doesn't affect the stock price. And so far it hasn't. It's just been falling. Yay. It's SPY. Pretty big rally there. Let's see if we get resistances. $31.80 barbecue new high on the day there. $31.95, up 5.5%. Teddy is now 7.4. 2023 trade name in many of my BY categories. I don't even know what that means, Maui. Trade name, BY categories. I don't even follow. It sounds like tin though. 32 cents on barbecue. Did it. SPY still going there. Hey, Jack Wolf, good morning, man. RXT's up 4.5. That trend, it looks nice. Still looking nice. GME down 0.7 now. It's rallied up a little bit. Not really. SPY just being straight green out of the gate. I think we should get a nice little reversal here from this morning. $32.50 on barbecue. It's up 7.6. A little red candle there on barbecue. Looking very good though. SPY hit right at our line. See if that's the high of the day or not. GME NFT greeting this weekend bullish. I think it means nothing for either stocks. They're the faces or whatever. Yeah, I don't think it means anything. I don't even think they were trying to troll barbecue. That's, you guys have gotten used to it because that's what all I call it, but barbecue does not mean Bed Bath & Beyond to anybody. I don't know what other tin foils on that. But I would expect social media and marketing team to tweet stuff around a national holiday in regards to that national holiday without need for anything else. DWAC 12%, SPY still going. Barbecue 3160. Dish is down 3.8. This thing having a hard time sustaining a rally. See if it turns around today. Lift is up 0.39. AMC is down 0.68. Runs down 2%. Peloton's down 2.8. August 12th, registration number Mark drawing code 4000 standard. Teddy Holdings is the... I don't know what you're typing here. You're giving me addresses. What are those addresses? What's the significance? It's behind new high of the day there. Wow, it's gonna fill the gap this morning. That's crazy. Yeah, I'm down. Gap fill, then we don't have to come back up here. This might actually be a double top, which doesn't, I guess, matter to me either way, but would give more indication that we're not making a handle, I guess. They don't have to fill that gap anymore. Just tell me what you're trying to say, Maui. Buying at 18 by Friday. I don't think so. I don't think so, Lords. If we do get our run, let's see, was it Wednesday? If we kind of retest here, this high, today, or tomorrow, then I could see us coming down potentially on Friday, but I don't think it'll get to 18 cents unless there is news. In which case it'll probably just go to 0. Anyways, that'll be news that shares are worthless. And you can return them at the front counter on your way out. Okay, Lords. I don't have any. I don't even know what you're saying. You're saying RC, and you typed a bunch of stuff. What are you speculating on? I can tell you what I think. Trademark owner, Teddy Holdings. Are you... The addresses. Yeah, I'm not sure what all this is. A realist, I wasn't bullish until 2 days ago. And even that day I was like, I said we need to come up here for it to get bullish, otherwise we're in a head and shoulders. But I also still saw the possibility of this cup and handle. So wanted to see support somewhere, and then we had it last trading day, showed the reversals confirmed with the inverse head and shoulders. Right here. So it doesn't mean it's gonna go to $10, but I think it does mean it'll at least get to 35.70. And I might be closing out there. I'm starting to slow down a little bit. You just dump though. Support is just support. We're not messing with supports right now though, Lords. We're not. This is the support, and it held as 27 cents. But if it starts coming down, you're saying it could go to 18 cents. Yeah, that's possible. I don't think it would without a catalyst though. Unless if this rally just stops, and but I think we're doing a cup and handle here. Looks like that's exactly what this looks like. We're completing. That this was an inverse head and shoulders, and this is how I trade. It's not always right, but yeah, that's why I have risk management. It's not even supported here. Does Ryan Cohen own Teddy? So that's what all that text you sent. That's asking that question. I mean, I assumed he did. You're saying Who are you saying owns it if it's not RC? I understand your frustration. Nice little bull flag there on barbecue on the 5-minute. Sen is up 11.4. Actually, this, let me see this. Yeah, it does look like a kind of a bottom forming on Sen here. Miss Fresh up 7. This was a zip pick, I think. They filed many categories, same as BY. Yeah, I mean, they're still pretty broad and generic. That would make me think that RC doesn't own Teddy, though. Are you speculating that Bath & Beyond owns Teddy? Okay, yeah, you're going with the... it sounds like you're saying RC owns Teddy, and now it sounds like you're saying, or it sounded like you were saying he maybe doesn't, and now it's saying sounds like you're saying he does. Not sure where you're at, Maui. But yeah, I've heard of the theory on that Kai's has mentioned. They need the ticker for Teddy, which, yeah, it's interesting. I don't know. He could be right. You think he does? Yeah, I think it's pretty clear that RC owns Teddy. But I never knew that was up for question, I guess. People doubting that? Look at that bull flag. Might just chop around up here for a bit now. There, it was a little loud. What's the next runner? Guesses? I mean, I think barbecue looks good for a bit of a run. I'd say 12%. Conservatively, I'd say that's the first stop. Iron Net could also. Continue to rally. Spy. Huh. Oh, I'm joking about Spy. GME down 1.1%. A lot of biz going on for biz going out of business. What biz going on are you talking about? Yep, barbecue's looking good. 31.59. 4.6. INO is up 9%. Mullen's up 6. Jeez, this thing has been such trash. Or even gave back its gains. They didn't have earnings, they just had delivery numbers. Tesla doing. Tesla's pretty flat. BBBYQ up 12.5 now. Barbecue 3180 up 5.3%. Like this thing's even getting traded. Weird. Iron Net's up 12.3. Reddit VWAP. Kind of holding above this trend line though, that it failed last trading session. So it might be back up in the climb. SPY might be setting up a bearish engulfing candle. Big losses down 5.6 today. We had cash carried puts on this, but closed out of. Worked out pretty well. It's a nice trend. Might wait on that. But might want to get in some more cash carried puts on it. I think the IV was pretty high for some reason. But it has an engulfing candle so far on the daily. Might be slowing down. Yeah, it's almost 100%. Generac down almost 6 now. Now I have to decide if I should sell my calls or gonna keep doing cover calls on it. I'll just keep rolling cover calls on it. $31.65 on barbecue. Right around VWAP, up 4.8%. Prop is down almost 3%. AMC's down 3%. GME's down 1. Run is flat. Lyft is down 0.3%. And Dish is down 3.4. Head and shoulders on Cinemark. Seems like supply's starting to slow down, but it's upside. We'll just wait till FOMC to do some options. Or we could do some straddles or strangles. Wafer is down almost 5%. Roblox down 4%. Holy evaluation on Roblox. I was like, oh, they actually have some decent revenue and not operating loss, but look at their market cap. It's almost 25 billion. Woo. Rich. Fubo's down 4%. Redfin's down 4%. Things had quite the move. $31.60 on barbecue. SPY just made a new high of the day there. WETG. Ah, yes, WeTrade. We've looked at WeTrade. Don't see anything good about this. Maybe. Say it's an uptrend. Chinese stocks a reverse split too. Whew. Double whammy. Come to me with that answer. I don't have the tin. Borrow fee on barbecues, 107%. Million available on iBorrowDesk. Or yeah, iBorrowDesk. So maintaining its borrow fee, which is good. Anticipating that continue to going up and breaking the 129% we saw, the high on the borrow fee. Maybe this week. Maybe not till next. Oh wait, it's not updating? Hold on. Wasn't even paying attention. Yeah, you're right, never mind. It's not updated. Can't correct it. Not updating means they don't have shares, basically. There's no data to report. If anyone's wondering. Cameron wasn't, though. Yeah, maybe it'll be up at that higher level. New highs on it. down on the line, up percentage wise. IEP we both showing is positive 0.17%. 29 bucks. Oh, that's weird, Ace. No, so when it doesn't update, usually that means they're, I mean, they're not out of share. They're never out of shares, but yeah. When it's not updating, that means they're not, the number's below, around 0, so basically there's not enough data for them to even update. We haven't had an update on barbecue shares since Monday. So, yeah. Meaning there's not many. GME, or sorry, SPY. Green candle. There. Bull flag. Finger still looking good. Yeah, look at that. 5%. Got a nice rally. Chart was ugly though. It's just, yeah. I didn't like that chart. DWAC looks like P&D. I've never seen a stock stay in a SPAC form so long. Merger next week, you think, huh? Why? Because they settled with the SEC, or why do you think it's coming already? Why next week and not months ago? Or come out, no one's shorting the stock at 25 cents. Oh, we've got both the pumpers in here talking about DWAC. DWAC has had a big move as far as breaking out. Like intraday breakout? Because it doesn't look like that to me. It's just dead right now. Maybe if this catalyst can continue to fuel it, has pretty good volume. Found nice support there, 12.5. It's been there for a long time. It's funny, that's almost like back to its SPAC price of 10 bucks. Only calls. Doing good, J Souls. Doing good. Yeah, SPY, I mean, it gravitates to go up. So calls work better than puts on it, I think, on average more. Always depends on entry and exit, but SPY, if you look at the chart, it goes up more than it goes down. There's a monthly chart. So there's times when you can have puts that work better for a period of time, but it likes to go up. But I don't think that's a way to trade it, just looking at it like that. Anyways, I'm doing good. Yep, waiting for the short opportunity here on SPY. Speaking of all that. Oh, we do have FOMC today though, so it probably will get pretty volatile around that time. One way or the other. Both. Probably both. Barbecue 31.32, up 3.7. This is kind of the low of this barcode range. I think SPY is making a handle at the very least, if not a double top here. So that's what I'm looking for. Potential short opportunities. It bounced out of that pre-market gap down, but it doesn't mean it's not going to keep coming down. But yeah, I might just wait for FOMC. Anyways. Savers. Savers down 4.5. Getting the pre-market low from second day of trading. Like Savers. MC is down 4. Oh boy, they get news. B. Riley Security reiterates neutral. Oh. B. Riley's. Probably what that's from. Cosmo down 3%. Get that chart. Wish is down 2.8. Wow, dude. Well, Wish's revenue's gotten dunked on. Thought they used to make good money. UWMC looked like it made a big double top up here. Could be a cup and handle. Starts to reverse somewhere around here. Barbecue hearing today? Was there? I know some stuff got pushed back. I don't know if that was one of the things. Did or not. Oh, Reuters said they're filing for BK? What? That's what that dump was from then. I don't see that on Webull. Huh. Cole's still offering a dividend? That is neat. Me down 2%. Should they just tweeted it? What the heck? Someone has a short, they don't runs that Twitter. Spy, both flag. Looks like it wants to fill that gap still. Peloton down 2.6. Up down 3.5. That's crazy. You can just tweet that. With no... Yeah. No accountability. IronNet, 14%. Very nice. Oh no, never mind. That's Eno. Sorry. INO. IronNet's up 10.3%. Spy just ripped there. Gap fill engaged. UOX 11%. Mullen's rallying also. It's up 12.5%. kind of want to short Mullen on a rally. XPEV's up 8%. AI is up 6%. Wow. What are you doing, AI? I could be set up a bear or head and shoulders here. The shoulder kind of formed over the last half hour, and now we're getting maybe a head. Top of the head could be the gap fill though. Let's see. Yeah, it's nice. It shows the gap fills even on extended hours. So yeah, I might grab a couple puts up here at the gap fill. Or I maybe could add to my futures, which I would kind of prefer this early in the day, especially with FOMC coming up. I can't add to my futures, so I'll have to go with puts. A fake account? I guess that would make more sense. Cost to borrow. The borrow fee, the premiums, everything's high on AMC. Is that what iBorrowDesk is saying, or are you giving me a different... Oh, wow. Yeah, that's what iBorrowDesk is saying. Holy smokes. That borrow fee is insane. When I've heard people saying that, I thought they were like, give me the Ortex, and it combines it, and you get all sorts of different numbers. It hasn't been that high in... When's the last time it was that high? Ever. What? Dude, what is going on? Yeah, looking at the borrow fee and the price, it's not that closely correlated, at least not since October, like with rallies. But still, that is an insane borrow fee. Yeah, I don't even know if it was that high when it had its squeeze. Or if that's a glitch or something. Error. Maybe Cameron, yeah. I mean, there's a lot of speculation, of course, that it's going to be bad, the outcome of this court hearing, I think. That's why the borrow fee is so high and the premiums are high on the options. I guess if it's not, it could definitely be a catalyst for rip. That's interesting. That makes me want to get some calls. Maybe some spreads. I have cash card puts on it, but you don't get as much upside on that. You have a big move. It always bounces on this $4 level. Till it doesn't, I guess. Ethereum Classic, or is ETC just Ethereum? Yeah, it's Ethereum Classic, right? ETC. Classic. Classic. Yeah, the thing with AMC are these options, though. I think you really need to do spreads. It's not crazy. 120%. It's high, but look at the put side. Look how much higher the IV is over here. That's why the cash secured puts have been nice. Wow, that seems very unbalanced. I don't know if I've ever seen that before. Yeah, I don't think I've ever seen the IV so unbalanced. I don't know if that means there's just way more interest on the put side. More demand. There is. Yeah, there is. You can see it. There's a lot more open interest on the puts. Yeah, everyone's betting on this thing getting dumped on after that. Their next, their court or whatever. 123,000 on open interest on the 3 strike. Or if you go 3 out of the money, the calls, it's 2,400. Yeah, that's why the IV is so high on the put. That's crazy though. Never seen it so biased on the options chain to one way. I mean, yeah, you get some YOLO calls. It makes me kind of sketched out about being long on it though. How heavily the bias seems the other way. AMC manipulated, too manipulated for options. Too manipulated for options? They use the options to manipulate the price, most likely. I mean, that's what they've done with GME for years. Them doing it with AMC, I'm not sure. The court hearing is about them merging with their ape ticker. I think it's merger. I don't know what to call it, but it basically would be a would it be, yeah, it'd be like a merger with their ape ticker, and it would be dilution. And some shareholders, I think, are suing them because they're saying it was against their wishes, I believe. I'm fumbling through it, but I think that's kind of the idea of it, which is true. They basically voted no on dilution, and then Adam Aaron came up with this genius way to dilute without the shareholders' approval and create a new ticker and do all sorts of deep convoluted stuff that I don't understand. $10 in the money put. Yeah, 262,000 on it. Yeah, it's crazy. It's crazy weighted. Oh, the call actually has 291,000. So yeah, they might be doing like, they might be suppressing the price with options. I don't know. That might be one play. A big spread. Mullins 15%. Look at this thing rally. INO's up 17. Estimated float on AMC. Like I say, estimated. It says the free float's $500 million, 516 million. I don't know how I would equate that with Ape, how that works. The Ape free float's 928 million. So potentially a massive amount of dilution if I think they get this merger or whatever. I don't know. There's some people in chat I know that know all about this. Spy maybe making that head. Very slow. I think the volume's pretty low today until probably FOMC. Sorry, I had a phone call. I did get into some spy puts there. We'll see what happens. I have a golfing candle in the 5-minute. I think it's set up a little head and shoulders. We did basically fill the gap. Yeah, it's showing gap filled here, but not in extended hours. That's strange. Oh, there it goes. Yeah. Still kind of shows there. Weird. But yeah, right on cue with the gap fill. So, see if that is the high for the day. Happy Wednesday to you too, Daniel. Here comes SPY back down to VWAP. I just got some daily 442s. So, we'll see. Might slowly X out of them. Might even start right here. VWAP up 35%. Nice to have exposure for FOMC. Barbecue 31.11, up 3%. Look at that. Bounce off of VWAP. Fed minutes re-release. FOMC is on the 25th, 6th. FOMC meetings today. Is when the minutes are released. The actual meeting itself, you're saying? Yeah. It's the minutes for the FOMC meeting in June. That's true. It's not the actual FOMC. 7 more days? Did you start your pump? You cranking? It'll take 7 days to fill it? You usually fill it this late in the year? All right. RP's coming down a little bit. Still liking it. 30.95. It's up 2.48%. Fine to see if it comes down here. Might even fill this gap, honestly. At 29.50. We'll see. Would like to see it hold the 29.02. This shoulder if it makes it down that far. If it breaks that shoulder, I might actually be closing out. That would probably be my cutoff or failed handle. So I think it'll stay above that at this point still. Oh, spy. Boy. Where you going, boy? Dang, the move to VWAP was the move. Still thinking we have a head and shoulders here and an engulfing candle. Now do I close the puts? Waste a day trade. I think there's too much volatility with FOMC. Gotta hold it. Or the minutes. INO's up 24%. All in 13. My size. Zen's up 8. Ewok's up 8. GME's down 2.4. to run first, AMC or barbecue? Depends on what you define a run as. Oh, you're having a party on the 15th? All right. Party at Ace's house. Barbecue bottom? I think we hit it. 26, 25, 55. I think we're in an uptrend now on the handle. Bottom on the day? I don't know. Maybe a gap fill of 29.50. Very bottom, 29.02. Only calls on spot. I think we'll get the move down at H. It's all about the timing though. Like calls only work if you time it right. Spot calls here, you're still negative on them. You got dailies. My puts were up 36%. I just have limitations of day trading on this stupid account, so it keeps me from getting out of stuff, which is insane, but true. All right, see if it breaks the high of the day or if we're kind of double top up here. There's a little double top. Oh, Beyond woke up 3.5%. There you go. Hey Dink. Good morning to ya. Beyond's up 3.7. Interact's down 5.6 now. Bird's down 5%. Confluent down 0.3. Zoom is flat. Teledoc's down 1.7. First Solar's down 1.75. Fisker's up 3%. Joby's now green 2.5. Lucy is also green 1.5. And GME is down 2.5. Barbecue still kind of melting down a little bit. 30.89 plus 2.2%. Mullen's rallying 16 quarter.
Technology is definitely a sector that we've ran. Also looking into cyclicals, particularly focused on cyclical industrials.
I I see. So at this point now, there's still a little room to run. Tell me a little bit more about that call. You talked about industrials a little bit. There's certain sectors that you seem more inclined to think that there is a little room there. Which ones seem more positive to you at this time?
So right now I'm looking at companies such as Caterpillar, and I've been a huge fan of NVIDIA given a lot of the work that has been done right now with machine learning and AI. Particularly, I think that the stock has been trading very well. On top of that, they had like a really good earnings last month that really, to me, just kind of solidified that they were, again, something that is a necessity in the market, but also something that continuously is showing like very, very good valuations. And I think also partially a lot of the way that I've been thinking about the market these days, or the way that we've been thinking about the market these days, has a lot to do with what we think is going to happen with the Fed. And we think that there's a lot of room to grow, we're not necessarily in like recessionary territory, but if we're looking for good defensive stocks that can be used towards that, that's where I'm kind of seeing a lot in cyclicals and technology.
I see. Any thoughts on the Fed minutes that are coming out today? We're waiting on a jobs report Friday. We got some weak PMI prints. I mean, China is showing a little bit of weakness there. Your thoughts on some of the economic things that we're following?
Sure. So the Fed is releasing their minutes, I believe, sometime this afternoon, and that's probably also what's driving markets a little bit down right now, because the expectation is to do some small short-term panic in the moment. But I believe that what we'll see in the Fed minutes is continuously the expectation that we will potentially have 2 more rate hikes before the end of year. Right now, the Fed has paused, but that does not mean that they are completely done, especially given that inflation still remains around 4%. So with that being said, I think there's a lot of like market noise right now, but once the minutes come out, we will probably expect the markets to cool down a little bit or not be in the negative right now.
I see. So okay, just in this wait and see. In other words, they're a little cautious at this moment. You noted the inflationary environment. There were people that were hoping in June that the Fed was done. And there was, the other camp who said, look, I mean, that was just like a skip, and we'll see it in July, and we may even see one more after that. Do you think that at this point now, they're going to be watching wage growth, they watch the PCE, things seem to be going in the right direction? Are they making a mistake by hiking 2 more times if they do?
I think that the Fed is giving themselves room and opportunity to hike in the case that things go awry. Like you mentioned, I believe the PCE for May was up 0.3%. And on top of that, job growth continues to be relatively steady overall. And so all of these factors point to a growing, steady economy. However, and then also with that, consumer sentiment continues to rise along with that. Now, one of the things that the Fed, I think, is trying to tame for or build in a little bit of cushion for is if that consumer sentiment starts to play out in continuous purchasing power or increased purchasing power, which is not great for their job of trying to tame inflation. So if if the average consumer starts to get a little too confident, then suddenly we might find ourselves in a situation where we're sliding back into high inflationary territory. So being able to build that in and being able to have room to basically raise rates if something happens in the long term is, I think, beneficial for the Fed. And also considering that the United States is probably one of the more developed, one of the better is one of the countries that is doing better in this kind of potential recessionary environment compared to our peers in the EU and Latin America. So given what we've been able to accomplish, I believe that we're on the right track, but we still have a long way to go.
Victoria Mills, thank you so much. Wonderful to see you. Really appreciate it. Victoria Mills of Banyan Capital Management. Thank you for being here today. Thanks. Plenty more to come right here on Trading 360. And our 360 Spotlight will be joined by the president and CEO of Blink Charging. He'll discuss the company's latest move to incorporate North America charging standard into its entire line of EV charging products. Also, we'll be joined by the president and CEO of Finia. Borg-Warner spinoff began today. And so we'll hear more about that. What's next for that one? And our 360 round panel, all things Bitcoin, a little under pressure, but still holding that 30,000 line. What's next? And up next, the big three stocks, three charts, three trades. Ben Lichtenstein goes through the technicals. Don Kaufman of Theo Trade takes us through the trades for Caterpillar, Beyond Meat, and the VIX.
SPY is showing some weakness here at the highs. Barbecue is at 30.80, up 2%. Just catching up on some stuff still. AREB is up 9%. SMX up 8.25. Got Mullen still running, 25%. Yeah, fill up here at 13.50. The downtrend on this thing is severe though. When you pump like this, just seems like a good opportunity to short. GME is down 3%, even with the SPY coming up. That poor girl's nervous. Felt bad. Still nothing populating on my borrow desk for barbecue, which is a good sign. They're engulfing candle, maybe setting up on SPY. Eyes continuing this uptrend, it looks like. Look at the VWAP, look how aggressive that VWAP is. All right, 11:20. We are 10 minutes away from EU close. We're at 21 likes on the day. Thank you guys. Hope you had a good, nice, long weekend. Thank you for your support. Out for head and shoulders on the SPY here. Build the gap. We double topped yesterday, last few trading days. Made a double top with yeah, right here. Oh, we're seeing if we build a handle or if we're actually double topping. Gonna come down and make a inverse cup and a handle. But that could happen today, could happen in the next few days. Might take some time. FOMC or the minutes today might have some might add some speed to it, some velocity. Liechtenstein.
I'm sure he's going to say no. Ben, do you like Beyond Meat?
I am not a huge fan
Come
one
on,
way or
Ben.
the other, but Don was right in terms of me not necessarily subscribing to the bullish sentiment on Beyond because of the bigger picture, but I will argue, and I think this is supportive of what Don's looking at. If you have been trading to the bullish, the upside and beyond, you better be trading the short term, and it sounds like that's what Don's focused on. I'll show you why. First and foremost, Don did mention a big move off the $10 level, so we're seeing that. But that came after some declines here. This chart goes back to the beginning of the March highs that we saw up around 22.23 to decline all the way down to that $10 level. Nicole, take a look here. As you can see on the way down, areas of consolidation that formed. 18, 15, currently balancing around this $12 level, and really just not really providing any real direction one way or the other. No follow through to the downside, no rejection as of yet, but in many ways that's good for the bears, right? They don't want to see anything other than continuation of the pattern that we have been seeing, and that's been lower, not only on the hourly candles, but taking a look here, Nicole, this goes back all the way to, we're talking back to the summer of 2020. You can see again areas of consolidation forming at lower and lower level. Working assumption
something like that. Sounds like a song
from
Sir Benjamin. I like it. I'm bullish on it. Bullish on the TA up until 35.70 and see what happens up here. So dip buying, or I'm bullish unless if we fall through 29.02. If we fall through that, I'll have to just reassess. Where's the moon? It was pretty easy to hit the other night. It was a super moon. Right now, it's sunny out, not as easy here in the Western Hemisphere.
Again, I see a bearish narrative here on the bigger picture. I can understand Don's bullish sentiment short term, but longer term here, the trend to the downside is pretty well defined.
Right, understood. So you're not a believer as a bull in the long term. Don, if
I'm a believer.
I won't be are you gonna maybe we'll have
Shark.
something else for
Hey,
you?
Benjamin.
Are you beyond
I'm in. Look, I live on an island like 8 to 10 months out of the year, so they're great in terms of storage. So yeah, we absolutely do eat them. It's good island food,
okay.
and you know, it's harder to find meat sometimes on a 28-mile island. So yeah, they work.
Told you he was a shark.
All right.
He lives on an island.
We'll take it. Let's turn your attention
What
over
island does
to
he
the
live on so
VIX,
often?
which has been incredibly low. Let's see where it is today. 1410, so it's up off 13. Your thoughts on the VIX?
All right, I'm looking for a bounce back on the VIX. Now, the trade I'm about to actually bring to you can be used both as a shot for upward momentum in VIX. It could also be used as a hedge, just in case you're a little nervous about your long portfolio. I think the S&Ps were up about 16% in the first half. Either way, the VIX trade is kind of looking for, if you will, a wild and woolly move back to volatility. The trade that I'm actually looking at is all the way out to the SEP20 expiration. Again, the SEP20 expiration. And what you have in VIX, again, we're looking all the way out to the September expiration, is a big implied volatility skew. And that implied volatility skew makes, for example, this particular spread. What spread are we looking at? Well, we're going to buy the 20 calls. We're going to sell the 30 calls, the $10 wide spread. And that $10 wide spread is pretty incredible at the price of $1.10 debit. And the reason, okay, that it's $1.10 debit, again, there's an amazing skew that is on the calls inside of VIX at present times. A lot of demand for those out of the money calls, causing, again, a tremendous amount of distortion, if you will, in the implied volatility skew of VIX. Again, this $10 wide spread all the way out in SEP, trading for $1.10 debit.
Ride is up almost 7% today.
Ben, your thoughts on the volatility index?
Nicole, much like Beyond, if you're thinking bullish with the VIX,
Beyond 4%.
Term, because the
Do
long-term
it.
trend has been to the downside. This is a reflection of investors focusing on the positive, discounting negative, and the rally we've seen in the indices. Taking a look here just at the last 3-4 weeks of price activity, you can see a couple areas of value that formed at lower levels from 18 down to 1365. Currently balancing around that area
about the
right
VIX.
now, trading around 14. But let's step away from the hourly candles. A very similar pattern playing out here on the 4-hour candles. This chart goes all the way back to the beginning of
Vroom,
March.
still on a
You
nice
can
trend.
see
Look at
that
that
we
trend on
balanced right
Vroom.
around this
It's up
$26
5,
level. You can see
6%
the high
today.
conviction sideways, side to the downside, sideways consolidation, another
At
breakout at the beginning of
123%.
June, and look what's been happening since. Basically,
Last
just
41 days.
consolidation again. 1365 being the key
And
area to
boom.
watch right now. I mentioned here how this is a reflection of investors focusing on the positive, discounting the negative. Let's take a historical look at the VIX so you can see where we are right now. It puts us back to levels we haven't seen since the beginning of 2020. Pre-pandemic spike up to 85. Look at this longer-term trend to the downside, lower lows and lower highs. I'll give Don, the one thing we haven't really seen is lower lows as of recent in terms of follow-through. We've kind of been holding this area, but the VIX, again,
almost got
pretty much
almost
a
got some cash
sign
grid
of
puts
a market that's been
last day.
rallying,
Space.
prolonged highs, very well-defined uptrend here in the indices off the October last year lows.
Right. All right. Thank you for all
Things
of
sketchy,
those
though.
today, Ben Lichtenstein. Appreciate it.
Liechtenstein.
Don Kaufman, final trades on this, or
GME
just
down
the market
3.3.
ahead of the
INO is
Fed
up
minutes
30%.
ahead of the jobs report on Friday. I mean, we've had
All
3
in
days
23.
of gains now.
DWAC 11.
Yeah, it all comes down to don't get too comfortable, too complacent, and it's exactly why I actually put together that particular VIX trade. Look, again, it's a handful of tech stocks that are basically holding this entire marketplace together. I'm not warm and fuzzy about that. Look no further than like the Russell in terms of volatility literally today, and you'll see markets, they're completely destabilized, again, being held together by mega market cap trillion-dollar plus companies.
Right, understood.
Sharkman's not
Great
wrong.
to see you both. Really appreciate it for the big three today. Don Kaufman of Theo Trade and our own Ben Lichtenstein. A good look there at Caterpillar, Beyond Meat, and the VIX for the big three. Thank you for being with us. Coming up next, you got to charge those EVs, right? We're going to spotlight Blink Charging. We'll be joined by the president and CEO of the company next to discuss the very latest with Blink Charging, incorporating a North America charging standard into its entire line of EV charging products. All the details.
Sometimes you can't even, I don't even think I can see it right now. Crazy. Run is up 2% now. Oh, look at you. AMC's down 1.9. Kind of bounced off of that low that it had, which was maybe from what you were saying, Cameron. Maybe it's from that tweet. They're going BK. Or it could have been from the downgrade, I think, that it got, or whatever. The price target. Neutral, hold. BBBYQ is at 3070. It's up 1.6 now. Still nothing populating on iBorrow desk. Nope, still nothing there.
They bring in better margins also because of the labor force there. It's a more affordable labor force than in the United States or in any other area for that matter. But this company got this strong sales figures, of course, in part due to those steep discounts that Tesla had been making, cutting prices globally by as much as 20% so far. And we'll see just how much the sacrifice in the margins have made an effect, or the sacrifice in the prices for the actual volumes. We'll find out more about that when the company reports its earnings later this month.
Yeah, thank you for that. I mean, it's just been an incredible name and a leader and a stock winner. I mean, it is up 126% this year. People are loving Tesla. Renita Young, thank you so much. Good luck there at Tesla, and a great setup for our next story. I want to spotlight now Blink Charging. Brendan Jones is with us, President and CEO of Blink Charging. Brendan Jones, great to see you. Welcome to the network, our first conversation here. We've always enjoyed talking to the team of Blink Charging. Where do we stand now? You're updating, upgrading, growing. I mean, everybody knows EVs are where it's at going forward. Tell us a little bit about the current conditions.
Sure, absolutely. And we'll play off the NACS standard or the Tesla standard for a little bit. It's great news for the independents out there, and Blink is one of the independent companies that both produces chargers, installs, and owns and operates charging. And what you think is Tesla is the dominant market player. Now Blink is going to begin building chargers with the Tesla cable and connector on it, inviting more Tesla drivers to charge at our stations and creating a higher level of velocity for the products that we sell. So this announcement is tailored for us, and it also comes at a great time when we're re-engineering several of our product lines, especially DC fast chargers, or supercharging as Tesla calls it. So now we're going to have a charger with the Tesla cable on it, can service Tesla drivers, and on the other side, it'll service CCS drivers. So this is a volume increase. The more people and drivers that plug into our chargers, the more revenue that is generated for Blink.
So at this point now, I mean, you're talking about Tesla, and since we're talking about it, let's talk about what's going on. They have their superchargers. They're working with a lot of big companies like Ford and GM.
That number is decreasing as we get closer. $20, only 11,000% away. It's pretty impressive.
Now, Blink Charging is making their equipment adaptable, so you can charge your Tesla, and you'll be happy to have a Blink charging station. You don't view each other. Do you view Tesla as a competitor? Because I know you work closely. Like General Motors, for example, had Blink charging in the stores. When people were buying a GM car, they would show them the Blink charging, how to charge their car, right?
Yeah, so look at it from this perspective. So we got about 4 million chargers installed in the United States today, right? If we're going to hit 35% market share of EVs by 2030, we need 30 million chargers. So this means that all ships rise. Now, the Tesla network is not going to be able to satisfy the vast number of drivers' needs.
$500.
The OEMs that said they're going to now switch to Tesla standard, the majority of those vehicles can't charge on a Tesla station today, mostly because of cable length, charging speed, and the software. Ford said they'll come out with a Tesla-capable vehicle, and that's going to be 2025, maybe 2026. The same with GM and the others that have come on. So we've got a lot of time before that happens. And most of the impact is going to be on Tesla stations that are installed from today moving forward. There hasn't been a legacy announcement that they're going to retrofit all the previous stations to be able to charge these vehicles, because those stations, they're made with high quality. They're made specifically, though, for Tesla vehicles. The things we're going to be battling is where the port placement is on the charger, and you need longer cables to hit all the port placements. So
Playing poker with them? Nice.
With the total volume coming of EV sales, it's a big pond to play in. Tesla's going to get their share.
I mean,
Blink is
OTC
gonna
has
get our
stuff like that,
unfair
Cameron.
advantage, and like we like to say, our unfair share of
It's
the
just a
charging
gap
market.
candle, though. Not a
All
candle, it's
right,
just a
and
gap.
then are you charging anything else? Anything by the water, on the roof? Or is there more expansion possible, not just cars?
Oh, absolutely. If you see what's going on, we've been in the news. The aviation industry on a pure electric airplane is out there. The marine industry out there on marine charging is coming to place. And even we're seeing a transition among ancillary vehicles at airports, at different ports throughout the United States. Most importantly, you're seeing a transition in fleet. And Blink was just awarded part of the post office deal to charge their vehicles. That charger deal is $41,500 over the next 3 years. The single greatest award out there from a United States entity to charge vehicles. So all of these opportunities are blossoming now. And what we need to do is make sure that we position Blink with the products and services and systems that our new customers, whether they be fleet, Tesla drivers, new GM drivers, etc., across the whole system, that we have a charger that can take care of their needs.
So that's the largest deal for a U.S. Company, a federal type company for EV charging. That's what you just said,
the
right?
post office deal was the single largest single award for it. Now it's split three ways, to be clear, but Blink is happy to say that we've delivered and we've over-delivered, and we look forward to the next stages of the agreement as we move into 2024.
So what car companies do you work most closely with? I mean, when you pick up the phone and you end up talking with these companies, there's been a lot of excitement pertaining to Rivian and some of these other names. Is there room for all of these companies to do well and survive? What do you see, especially for the up-and-coming EV names that you said, look, the EV world is growing, but they can't all grow, right?
There's certainly a need for the companies that are delivering products and cars that the U.S. wants. We're not what we'd say a compliance company. We operate in a compliance country. We operate in Europe and
I'm liking where Nerds is getting
other areas where
price-wise.
EV is being forced. In the United States, it's being adopted. There's some legislation that's friendly to it, but the way you get EV adoption is you bring out vehicles and platforms that are attractive to the overall consumer base. So let's look at the shift. From when I started in this space, we were selling Nissan Leafs. It's a little subcompact. And I used to get questions about, hey, can I haul wood with that? And I go, do you haul wood with a subcompact? Now we've got pickup trucks, SUVs. We have a new Hummer coming on the market.
100,000%, nice.
Electric, and it's a beast, but it's everything you'd expect out of a Hummer. So the industry is diversifying, and it's offering EVs in all shapes and sizes.
But still not working for you?
2035 in California, you can't buy anything but an EV in that state. So that means all segments, all cars.
Look, we know. I mean, we know, and then everybody was buying EVs, and then they did a power rationing, and then people couldn't charge their EVs. I mean, that's like a nightmare waiting to happen for folks. I mean, I don't know how quickly I could sign up for an EV for that reason alone. That being said, I can certainly respect why an EV is important. But another reason why I think people who are skeptical is the charging time. There just seems to be this uncertainty. You can't go very far, and then you got to charge again. I mean, from Manhattan to the Hamptons is, 100 miles or something. How long do I need to charge for again? Can you speed this up?
Yeah, and it all depends on your situation. Here's the first part of the equation. 90% of all charging is going to take place on L2 charging and take advantage of where the vehicle sits. So it's the equivalent of you waking up in the morning and your gas tank is full without you doing anything. 10% of that charging is going to take place on the highway, but yet the OEMs have structurally adjusted over the last 10 years, offering vehicles with higher and higher range. When I started, you had a 75-mile range on a battery. Now the average range is between 200 and 350 on a battery, which is equivalent to many internal combustion engines that are out there today. So then the speed of charging, if you need convenient and quick, that's improving. Again, when I started, the maximum DC fast charging speed you get is 50 kilowatts. Now it's up to 350, and they're moving to megawatt charging. So everything is improving incrementally over time, and we're going to have this equivalency to fueling out in the public. But keep in mind that according to the Department of Transportation, your vehicle sits 95% of the time. So we need to provide charging services where those vehicles sits, so they start up with a full tank, and they can make that trip up to the Hamptons no problem.
Yeah. Okay. Let's leave it right there. Brendan Jones, great to see you.
Yeah,
President,
see, it's
CEO,
different though when
Blink
this
Charging.
market
Thank you.
cap's not as crazy.
Coming up next, we're joined
So
by the
barbecue's
president
already
and
at
CEO of Vania, the company that just began trading today. Right
such
here
a high
at the New York
price
Stock Exchange, completed the spin-off from Borg
that
Warner.
it's
We're
not
gonna
going to
learn more about that
just make a
company
3,300%
next,
move
coming up.
in a short amount of time, most likely. If just compared to other OTC stocks that are, you know, trading in fractions of a penny. %. I don't know what ISMRF. Yeah. Yeah, no, it is insane. Yeah, that's why that's the appeal for OTC is just you can get insane percentages. You know, stocks, the more sketchy it gets, the higher range you can have. Find a winner in like OTC and the penny stocks, like a winner, like a lifelong, like trying to think of some of the examples I've heard of that traded in the penny stocks and then they're like huge companies. Find a winner in there and you're set for life, because you can just accumulate so many shares at such a cheap price, and then yeah, the crazy percentage gains, and then if it becomes, you know, sustainable business, whatever. Pretty much, yeah, Cameron. Very similar. Mullen 25%. Yeah, that's true. That it is a lot like crypto in that sense. That's funny. I've not really thought about that. Just picking random tickers based on their stupid name. The crypto world. Barbecue, maybe found a range here. It's at 30.70. But still feel like gap to downside. Dish is now green. Plus 1.4. Shook off that morning red. Same with PaySafe, it's up 1%. Run is up 2. Like this inverse head and shoulders on run. And the breakout and the retest of this range. Just taking a while to wake up. Eyes coming down a little bit here. AMC's down 2.8. Drop is up 2.3 now. Making its way back to VWAP, which is quite high. Barbecue's at 30.75, up 1.8%.
We don't want to lever up more in this environment with the interest rates where they are. But we're going to look at, smaller bolt-on acquisitions that we really think are going to, add to our cash flow and add to our EPS, in a very short term.
Brady Erickson, great to see you.
All right,
Congratulations
great. Thank you very much.
to you and the team. So glad that you're here today. President and CEO of Finia just started trading here at the New York Stock Exchange today. It's up about 12%. Coming up next, our 360 round, we'll talk all about Bitcoin. Wanted to find the potential ETFs that are coming our way, the latest price action. What do you need to know as it holds 30,000? We'll be right back.
I think my calves are sore from riding on a boat. That makes sense? Like standing through kind of chop. Like flexing your calves. I don't think I've ever had that happen. Groupon looks like a nice spot to maybe go short on. On under the water 20 days at a time. Yeah, I bet. Not even like it was that choppy, it's just my calves aren't used to standing on a boat. Like trying to figure out why they're sore. Maybe it has happened before, that's what made me think of it. You've lived underwater for 28 days at a time? Like in the hull of a ship? How would you be underwater? In a submarine? An underwater village. Eyes coming down. If we break VWAP here, Head and Shoulders has formed, but I haven't had any continuation from it yet. MACD did flip bearish. We have red under the 9. There you go, there's a SPY. I dropped the VWAP, bouncing back off that support down here. Barber coating 3068, up 1.6%. Oh, walking on the bottom. 2 hours down, 2 hours up. Dang, dude. How far down did you go? How far down was the bottom? Alright, should have taken that 36% earlier today, but take what we can get here. See if we get a reversal at this wick right here, 442.95 area. I'd be setting up a big inverse cup handle on the day. We continue the handle of this part. It's bullish. A longer time frame.
And look to Federal Reserve meeting minutes coming this afternoon.
Barbecue
the Fed's June meeting
broke below that barcode range, 30, 39.
Where monetary policy
Coming down
is
a little bit.
after the pause. Now let's take a look at the 4 major indices, which are off of session highs and off of session lows. The drifting lower right now. S&P 500 down 0.2%. The Dow Industrial is off at nearly 100 points, or 0.3%. The Nasdaq 100. Tech down 0.1%, and the small cap, so Russell 2000 leading to the downside, down about 0.9%. To help me break down this market action, let's bring in my co-host Kevin Hinks. Kevin, I kind of wanted to get your take here. Holiday shortened week.
Mullen's up 30%
we had
now.
some weakness earlier based on the fact that some data out of China was weaker than expected, still in expansionary territory. But what's your take here on the market moves? We kind of seem to be drifting here.
Yeah, I think this market's story today is a classic story of, bad
In the bathroom?
PMI numbers out of China, Singapore, and Hong Kong weakened the Asian markets, which bled into the European markets, which then bled into our
He's in his new
overnight
unfinished,
futures markets.
unfurnished home.
Once our stocks opened around 8:30 Chicago time, 9:30 Eastern, they kind of took some of those losses out. The NASDAQ actually went positive for a while. So it just shows you that when you see foreign markets down, our futures follow that. Don't necessarily think that that's going to be just a knee-jerk down day for the U.S. stock market, because we lead them most of the time. They don't lead us. Now, let's get to today's overall trade. We have a big week. It was a slow start to the week, but it's going to be a really busy end of the week. And it'll start this afternoon, Tom, with the Fed minutes, like you mentioned. I think that's always a good look into what the Fed's thinking. And this one will be a little bit different because they paused at this past meeting. So I think they're worth watching. I don't think the market should move, but they always do, Tom, on the Fed minutes. So, yeah, they're worth watching. Then we
Barbecue
get into
back to break
what
even.
tomorrow can only be
30-20.
described as a data dump Thursday. I mean, there's so much economic data coming out, and then we'll get the number one data point of the week on Friday. But, you know, a couple things to be watching for. I think the UPS news is a bit alarming, even though they have till the end of July, so they still got plenty of time to get that figured out. That's weighing on UPS. But, you know, this is a market in the middle of summer, Tom, looking for a reason to move in either direction. We've got another week and a half before we get to second quarter earnings.
Yeah, the rest of the week is going to be jobs data heavy here, Kev, so we're going to focus on that. But one of the stocks that's moving today is Netflix. Let's bring in Jenny Horn, markets correspondent here. More analyst calls on Netflix. This stock's been a stalwart. And Jenny, nobody includes this in the Magnificent Seven, but this is part of the Elite Eight I've taglined.
I would definitely include this in, okay, guys, I like the Elite Eight, but this is definitely, I mean, I still check the FANG acronym. I know that's like 2 years, 3 years old.
No, it's because I was playing copyrighted music.
Still, to me, one of the most compelling stories to watch in the market. I think just given the outperformance we've seen with shares, I mean, up 161% off their 52-week low. I think that definitely begs for some attention here. Also, new 52-week highs in today's session. And as you can see, when looking at the 12-month daily chart, this name has just been a relatively strong uptrend. Of course, it hasn't been just a straight shot to the upside, but it's felt like that now when you look over the last 12 months. Goldman Sachs today, though, a little bit late to the game, upgrading shares of Netflix to neutral from sell, as they were one of 3 sell ratings on Netflix, but no longer. Also raising their price target to $400 a share from $230. This does imply about $40 of downside from actually where we're currently trading. But they said this upgrade does reflect the overall positive current operating performance for Netflix and continued forward operating momentum now into 2024 as well as 2025. The firm does expect Netflix to report an above street modeled subscriber performance as a result of this solid mix, they said, of really content as well as more effective password crackdown execution and overall levels of revenue accretion driven by this mix of unpaid consumption households that are now adopting this paid model, and of course then creating those additional profiles per these new measures that have been laid out by Netflix. Goldman now finds it unlikely that the shares will underperform for any period of time over the coming quarters, which again, I would say a little bit late here, especially when you look at the price activity over the last 12 months. But all in all, this name doesn't actually necessarily seem as strong among the analyst conviction as I would have thought. There are 2 other sells on this name when looking at the several analysts that do cover. It definitely skews to the more neutral to bullish leaning in terms of rating. But all in all, this name has price targets all across the board, so it's difficult to somewhat pinpoint. But I think the chart speaks for itself here, and we've seen Netflix be a consistent outperformer. I mean, Disney who at this point?
Jenny, I want to start a conversation that we're about to have in a theme coming up on second quarter earnings season. And the theme is this, Jenny. Netflix, if you look, it ended the year, it ended 2022 about just under $295. $294.88 is where it closed on the year. So it's up right at in the high 40s, up around 50% for the year. But Jenny, it's also significantly off its highs, its all-time highs. So that's a theme we're going to see in a lot of these names. They're all up significantly this year, Jenny, but they're all nowhere near their highs in terms of all-time highs on the stock. So where do we go from here, Jenny? We're up significantly, but we're also way far away from the all-time highs in some of these names. How do we look at that, Jen?
Yeah, Kevin, I think that's such an excellent point, because I think when looking at these names valuations, you know, you have names like Carvana that's up like 400% now year to date, still nowhere close to its all-time high. So I think resetting these expectations with the reset in valuations we've seen, frankly, is important for this earnings season. But it's also interesting because 2 of the biggest, most influential names in the market this year, one being Apple, one being Nvidia, both are near their all-time highs, and that's pretty much it. I mean, Meta, Tesla, Netflix, nowhere close. So it's almost like are names like Apple and Nvidia then propelling the rest of the market because they are near their all-time highs, or are we just, sort of, I'd say, then readjusting our expectations given the fact that the rest of these big tech behemoths, like you said, nowhere close? I think this will be a really interesting earnings season to see what the back half of this year looks like, because we've so long been waiting for this bottom in the PC market, waiting for the bottoms in chips, waiting for a lot of the expectations for AI. I think will be interesting to see what this earnings season, of course, tells us for this long-awaited back half of 2023.
Yeah, got a couple weeks until that starts, or just over a week for earnings season. We'll get the financials first. All right, thanks to Jenny Horn, markets correspondent here, breaking down the news story on Netflix and the upgrade. I like that, the way that she put that, a little bit late to the game here as far as that upgrade goes. But now let's bring in Alex Coffey, senior equities contributor here on the network. Alex, I kind of wanted to get your take here on what's been going on in the overall markets. Had a really good start.
SDC is up 7.5. I think looks nice.
A little bit higher on Monday during the half session. But this is all going to be about jobs data this week, and I think that's really key and important because that's one of the mandates that the Fed has, and it's remained a lot more robust than a lot of people expected.
It has, and I think the second half of the year may be a much different than the first half of the year. And the reason I say that, Tom, is you kind of tie that into the recent updates that we've got from an ISM and a PMI standpoint, both here in the U.S. but also internationally. It's not painting this robust bounce back second half of the year, and that's sort of been the narrative. The narrative has been twofold to begin this year. One, it was a Fed fighting the inflation. All the while, it was concerns around a recession. And so as the inflation fight appears to be kind of rounding its final turn, the question now has shifted towards what is the economic picture going to look like? Within that, there's been somewhat of two-pronged situation here. One, there's been the international story, which was sort of supposed to be steadied by a robust Chinese reopening. The data we've seen so far is not showing that, Tom, and so that's just frank. And so the second half of that was, while the U.S. has largely been lackluster in this first half of the year, the idea has been a return to growth for the second half of the year, and that's sort of been the message. Well, if you're a business manager or a decision maker or a small business owner or a large corporation, if you believe there's going to be a second half rebound, you're really going to try to get through this first 6 month period or whatever that time frame is without downsizing your labor force, because you're going to want to have those laborers when you get to that. Mm-hmm. However, if it doesn't start to come to fruition, which it hasn't really yet, at some point you're going to have to make those tough decisions. And so right now, I think we're at a very critical point. I think it's too early to tell. We could stave this off. We could have this softish landing. We could have a no landing situation, or we could see very quickly
stave this off.
Because
SPY's coming down a little bit.
Hasn't been a good one.
It hasn't, and I think a lot of people are starting to say that heading into the latter stages of this year, the consumers held us up pretty robustly as far as the economy goes, spending on travel experiences, services side of the equation here, Kevin. But what if that pulls back here, Kev? Ahead of the fourth quarter, which is always historically pretty strong. What if we do see that pullback in inflation taking hold? I mean, we've got yields rising today. The dollar was higher also. The 10-year yield gets above 4%. I think that causes a problem, Kev.
Well, yields are always what you have to watch, right? Yields in the U.S. dollar are the number one and number 1A, 1B that people should be watching. But Alex made a point. The second half of the year was supposed to be the good half. Remember that? Mm-hmm. Early in the year, the end of 2022 could be everyone was setting up for the second half of 2023 and how good the economy was going to be. Well, that didn't play out very well. Stocks ran and hid on a lot of these people that were waiting for that big dip to buy, and now everyone's chasing. And now you got to realize maybe you were looking when you should be leaping, and now you're leaping when you should be looking. So I think this is going to play out quite interestingly. But guys, here's one last thing. as we go into second quarter earnings, right? The AI phenomenon, euphoria, momentum has been quite incredible. But how much of that AI is going to show up in second quarter earnings, right? They still have to put up earnings. These stocks have run a long way on some of that AI speculation, and it's really not showing up in any earnings per share yet. So how are these firms gonna, can they say, well, it's not here yet, but it's gonna be here, right? They have to keep promising it's like free beer tomorrow, Tom.
Yeah, definitely something to keep an eye on. One of the sectors that's been doing really well, Alex, is the EVs. We've talked about Tesla. We're going to talk about it with Likefolio, get some consumer sentiment data on that. But we saw some nice rallies in Rivian, got upgraded today, deliveries over with their Amazon partnership, but then NIO, XPeng, Li Auto, all pretty good delivery numbers. So it still seems like there's some demand out there from the consumer for the auto segment, and we're just starting to get some data points on GM and some others as far as deliveries goes for them.
This is where it can be difficult when assessing markets and trying to assess investing and trading and stock price performance, because companies can be doing okay and their stocks can get absolutely crushed. Stocks can be doing not so well, and their stocks can do or the company can be doing not so well and the stock can be doing okay. It's all kind of perception and where the market wants to reward the growth that's there or pay up for growth that isn't there at times. All of these names, including Tesla, got absolutely walloped last year. This is all just trying to make back value that at one point these companies already had. And so just like markets can overswing to the upside, they can absolutely overswing to the downside. And all the while, the company can kind of just be on the same steady track and kind of slowly but surely improving and making critical steps forward and kind of fall off that path. So all of these companies are nuanced in their own way. If we kind of look at this, though, from just a solely macro standpoint, a lot of bearish sentiment was sort of surrounding this market for the better part of the last year. At some point, the market can just be caught off sides, and you can have sort of these pockets. I don't want to call it necessarily a short squeeze because that can make it sound short-lived, but things can be just oversold, and when they can turn pretty vehemently and move pretty quickly. I think you're seeing that with some of the names like Rivian, for example. I think you've certainly seen it in names like Tesla that already have buyers wanting to invest in what they perceive as a future technology, but we can still be struggling on a macro front, and it can still at some point have an impact. And so I'm not surprised to see pockets of the market do well, particularly the high growth side, but that doesn't necessarily mean it's sustainable, and it doesn't necessarily mean that they should have been worth some of these oversold prices at the points that they were.
Yeah, definitely that rebound that we've seen in tech and Tesla, a lot in the EV space also. You have to wonder, are they getting too overvalued at this point, because we've pivoted pretty hard over the last 6 months in that segment especially. All right, guys, let's take a quick break. When we come back, we're going to take a look at one of the big tech winners this year. That's Microsoft. It's rallied over 40% so far this year and continues to take advantage of the bullish AI sentiment out there. Fast Market's coming right back.
SPY kind of consolidating here below VWAP, bearish MACD, right under the 9. Looking for a move back to the low of the day. I've got the minutes coming out in an hour and 45 minutes. Barbecue's basically back to open 30-21. Holding strong. Mullen, 42% there. A lot of volume today. Holy smokes. We're almost up to the average volume of the day. 12:30. It's great. I can see why, like, keeps trapping people. These big days it has. And the huge volumes. Wild. That doesn't make sense. 385 million volume today. What is going on with this thing? The borrow fee continues to fall also. What? That doesn't make any sense. SMX up 13.5. Had that share offering. Looks like it might be trying to fill this gap though from that offering. I don't know, we'll see. It's pretty early. GME is down 3.8 now. ARAB up 15%. Had a reverse split. UWOC still 12%.
We're out there and what he expects it to be.
Yeah, Alex, OpenAI service client base expanded from 2,500 at the end of March. Then in May, it hit 4,500. So this kind of plays into that. They're signing up new clients to this thing. And it seems like every company, every business, whether it's public or private, they need to incorporate this AI. Microsoft, you know, a leader as far as enterprise software goes, it just seems to make sense that they're going to get even more subscribers because they're already subscribing to a portion of their business, right?
At some point, you just got to determine what you want to pay for the growth.
Right.
Because if you look at it on a historical basis, let's say a 5-year kind of blended PE, the average valuation for Microsoft has been around 27.7, which is already quite hefty for a company
down a little more here.
Microsoft that has been granted growing at a pretty healthy clip because of Azure and some.
Really,
of
the play this morning was called right at open.
But right now it's closer to 31.
Those calls must have gone crazy.
So it's not only historically elevated versus where it's been, but we're also in a very different interest rate environment than we were over the last 5 years as well, which naturally kind of suppresses.
Even if we get a drop down to the low of the day, it's not going to be probably as much percent as you would have gotten on
it's hard not to say
calls
that
right at
Microsoft,
open.
at least relative to
Up to
historical
even like
values,
here.
isn't expensive. But that doesn't mean that you can't buy into
I don't
something.
know. The IV's higher in the
expensive
morning.
and it
You're
can't
paying
go
more of a
higher.
premium.
But at some point, you have to ask yourself how much is too much.
Yeah, and I think a lot of optimism out there in the stock market, not only for these big tech firms, but that total addressable market. How can they monetize it? What are the growth rates? We saw NVIDIA, who builds the picks and shovels as far as AI goes, how they raised revenue. Microsoft hasn't done that, but they did give us some guidance that this is really going to help their revenue stream moving forward, and maybe those growth rates are justified. But Alex, you got an example trade here that we're going to take a look at. Help us walk us through it.
Yeah, so I think that this is one, be it through passive assets being allocated to broad-based index related products, be it because Microsoft is one of the most, by market cap largest companies in the world, be it a company that we all encounter on a daily basis. There's a large portion, I believe, of investors that have some sort of tie to Microsoft in exposure. And so you may already be long this thing, even if it's through some other product or directly, be it in a retirement account or a more actively traded account. But that doesn't mean that you can't kind of trade around those things and reduce exposure through different types of trades. So if you kind of look at it from that approach, it's a neutral to bearish strategy, but it can be a complementary strategy to an already generally bullish position in a name like Microsoft, in a name that's outperformed, in a name that just set a new all-time high, in a market where not a lot of names are making new all-time highs. And of course, it's got the hype of AI. It's kind of got the mega cap tech thing going forward as well. And of course, a pretty resilient business model. But I looked at selling a call vertical above the market going to July 21st. I believe I saw that the earnings was slated for the following week. So this is just ahead of an earnings event that is on the horizon. Looking at selling the 352.5, 355 call vertical. If we collected somewhere around 50 cents of a credit, that would be 1/5 the width of the strike, so it would make a clean break even at 353 and a 4-to-1 risk reward ratio, so you're risking 200 to make 50. Look, this isn't going to hedge a position to the downside, but it would slightly reduce the cost basis around a position. It can be perceived as somewhat tactical in a name that is outperformed. And you're going to need a new all-time high in Microsoft to theoretically breach this on the upside, as the break-even is below 352, or the all-time high is below 352.5. And so I look at this as a situation where you're asking a name like Microsoft, it's sort of our vessel in this case for this conversation, to come and beat you, if you will, and set a new all-time high for this not to work. Even if the stock does get to its all-time high, it can actually have moved higher, and you can still be at max profit over the next couple weeks.
Yep, $2.50 wide, short neutral to bearish call vertical. You mentioned that stock trading just below $340 a share, selling in 352.5, buying the 355. Collecting 50 cents, you got $200 in risk on that one. Break even, 353, new all-time high it would need to go to, Kev, over the next 2.5 weeks. What are your thoughts here on the short call vertical?
Yeah, setting a short call vertical at what would make a new all-time high for it to get there. For you to lose money on this trade, Microsoft would have to elevate to over $353. So there's the decision that traders have to make. If you think it can get up there before the July 21st monthly expiration, coming up in about 2.5 weeks, well, then this is a spread, like I said, that still gives you room on the upside to be wrong and still be profitable. But yeah, this one collects data, risk defined, high probability, Tom, checks off all the boxes that we look for.
Yep, about $14 below, $14, $15 below the current share price in there. So good look at a short neutral to bearish call vertical there in Microsoft if you think it's going to remain below that 352.5 strike. And thanks to Alex Coffey, senior equities contributor here on the network. But coming up after the break, Kevin and I are going to be joined by Andy Swan from
Stop looking at me, Swan.
Discussion on Tesla, which is up over 125% so far this year as sales remain strong for the EV makers. Stick around. We're coming right back.
PwC Australia ties Google to tax leak scandal. Tesla's flat today, wow. Very flat.
Happening was you had a confluence of two things. You had, high gas prices, and you had the CEO of Tesla, Elon Musk, embroiled in this entire drama around buying Twitter, which really distracted, I think, the shareholder base and Wall Street in general. So Tesla was a huge topic of conversation without it really being about the cars. And so now I think that has changed, and most of those mentions are about the cars. And we see that when we look at Tesla web visits, which are up 26% year over year, near all-time highs. And what this tells me is that, Tesla at this point is now part of the normal car shopping experience. It's not just this one-off kind of weird EV brand luxury that is out there that people don't really think about. When people are starting to look at purchasing cars, they're starting online, first of all, because the dealer lots have disappointed them time and time again. And so they start online, they end up checking out Tesla. They see how affordable these cars are. This company is set to benefit in a really, really big way, not just from the EV boom. I think that Tesla has moved well past that and is just a really iconic, almost luxury brand that now a lot of people can get into for $40,000 or less, which is very impressive the way they've executed on this strategy.
Andy, when I look at all the topics that we could talk about when we're looking at Tesla, we could talk about the Cybertruck, we can talk about the Tesla Semi, we can talk about the charging network, we can talk about autonomous driving, we can talk about green energy and energy storage,
Barbecue
AI,
red on the day
robotics,
now.
the robotaxi,
30-10, down 0.3%.
Talking about, and the other side always wants to talk about valuation, right? This is, this stock is overvalued. It's got valuation problems.
I just added to my Zoom call.
The price is coming down.
You're right, Al.
Margin problems. But I want your honest opinion. Is the street reading this wrong with the margins? I see Tesla pressing its advantage when it comes to margins.
New low there coming down.
On margins to come down.
Not new low of the day, but
almost strangle the other
that little
EV
range was in.
and still make plenty of money. And you see the numbers, you see the deliveries. People see that as desperation from them, lowering the prices. I think he has got a chokehold on these other companies, and he's using it. Andy?
Yeah, we were on this show with you guys, I think, just a few months ago talking about this. And I tried to make the case at that time that this is a strategic move. This is not a move out of desperation. We see it in the data time and time again that demand for Tesla vehicles is very, very high and growing. It's not a move out of desperation. This is a competitive move like you talk about. And I would add to that I think what Tesla has that other car manufacturers, forget EVs, other car manufacturers in general don't have, is that the more cars that they can sell and build, the better and more scalable their
A lot of volume coming in
operations
there.
get. The way that they've set up these
Lot
factories,
coming
these
down.
gigafactories, is actually the more they produce, the more efficient they get, the more their costs come down. You know, it's an unbelievably scalable operation, and so I think
I got a head
lowering
and
the
shoulders
price
here
in
too.
order to
Shoulder,
continue
shoulder, head.
to keep demand growth going is exactly what this company should be doing. And like you said, they're profitable on every unit that comes out the door right now, and there's more room in that per unit profit margin to compress even further and bet on themselves. So I think this is well beyond an EV play at this point. This is actually something that I think
one
GM,
contract
Ford,
the time on these 5
Toyota,
puts.
all auto manufacturers, whether EV or traditional, are starting to become very concerned that Tesla is running away with the overall auto market, and it's a matter of time before that comes
Sold
to fruition.
one.
And Andy,
like to see a low of the day, but
social media mentions on your one chart, it says it's down a little bit, but
like
they
to
continue
take some
to
of the profits here.
outperform on the delivery side. I think they're believed to deliver about 1.8 million cars so far this year. Do they need, Andy, in your opinion, and some of the data that is reflective that out of Likefolio, do they need more models? Because it seems like the Model S and Model X just don't sell a lot, right? They don't produce a lot. It's all Model Y and Model 3. Do they need new models? Because you know what? BMW, Mercedes, Volkswagen, the GM, Ford, they're coming for them with a wider array of models. Is that going to be something that they can sustain if they just stick with these basic 4 that they have and then add that truck?
Yeah, I think adding the truck will be huge, you know, and give them an entirely new, fairly untapped market at this point. I do think that there's room even below the Model 3 in terms of price point. I think they're going to target that. And I think Tesla will have, you know, a car out there in the maybe $18,000 to $25,000 range that just, you know, could completely change the way the company is viewed by consumers more globally, I think, than in just the United States. But yeah, you know, I tend to agree with you. I think they've done a good job of focusing on the models that they do have. They have a nice breadth of price points, all the way from, you know, the Model X, which I think can be 120, 130,000, all the way down to the Model 3, which you can get for probably under $40,000 right now. The very low price point they're missing. But all in all, you know, people really do like these cars quite a bit. And I think they're not going to have to be like a Toyota or a Ford that has to have 7 different models and varieties and brands inside of the same price range. The Tesla name so far is coming through as being a high quality product that people really like. And so I think they're good from that standpoint.
Yeah, and Andy, real quick, the stock's up over 125% so far this year, 9-month highs. I mean, earnings in a couple weeks. Are you guys still positive on this even after the run-up?
Yeah, still long-term very positive. I think that there's room for this stock to be, you know, as crazy as it sounds, I think this could be a $700 to $1,000 stock within a few years. I think there's a lot of volatility in between here and there, as we've seen in the past. Probably due for a pullback. It seems like a lot of the great news is already baked into the cake, but this is one to put on your watch list. And anytime it gets that 20, 25% pullback, might be worth picking up some shares.
Yeah, the valuations coming into play, but strength of the consumer also will be key here moving into the latter stages of 2023. All right, Andy, great stuff as always. Appreciate it. Have a good day.
Thank you, you too.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data. Kevin, you know, scripted, you know, Andy's always really good on these discussions as far as Tesla goes because their data supports it, right? And I know he's a Tesla owner also, but how do you want to look at this from an example trade perspective?
Tom, I've got an interesting lesson to give our viewers. Now, the guts of this trade is buying the July 28 and selling the July 14 300 call calendar. So I'm buying the call calendar, right? Buying July 28, selling July 14, 300 strike. Now, that's trading, Tom, about about $6.5, $6.60, something around there. Here's where it gets interesting, Tom, because that middle expiration, that July 21st, that's the earnings week for Tesla. So, and Tom, right now, the July 21st 300 call is trading about $7.40. So think about that. Now, it probably won't be there when you're in the earnings week, but if we rally towards 300, it's currently trading right around between 730 and 735. So that premium is more than the calendar spread that you're buying right now. And if it were to start migrating towards $300, think about the roll that you could do and have this calendar spread for almost nothing, Tom. When the time comes, that roll will be quite chunky when you do that. I don't know what the price will be. It depends where the stock is trading, but at least you look at the possibilities of this calendar spread and say, the risk reward is relatively low. Now, you might want to do the put calendar as well. Maybe something around 260, something like that would probably be very similar. But Tom, for this example, we're going to do the July 28, July 14 call calendar, the 300 call calendar, with a chance to extend duration into that earnings week and sell that very inflated implied volatility that is coming on the horizon, Tom.
Yeah, let's break this one down. Going out to the July 28th weekly series here. Buying the 300 strike call, selling the July 14th weeklies that expire in 9 days. That same 300 strike call, you're paying roughly about a $6.65 debit. There's your risk, $665 per spread. I like this, Kev. The example that you're given is the fact that, hey, as you get closer to expiration in July 14th over the next 9 days.
All right, I got some SPY puts for you for tomorrow too.
You'll have that ability to roll.
I might close them out
the
today.
July 21st weekly cycle, which will capture earnings, which are on, I believe, the 19th.
Probably hold them though.
And that volatility.
19th, yes.
Yeah, the volatility should remain elevated, so you should get a good credit for that roll as long as the stocks.
I still have my dailies also.
300 strike over the next 9 days. When you do the rolling on this one, you do have some assignment risk on that short strike going into.
I don't know where it'll push gold.
You got to make sure markets are open, liquidity is provided to create those rolls and create those credits. But you can see right here, Kevin, even if it doesn't go to 300, you still got a nice wide range between about 282 and 321 for this stock to remain in, and you can remain profitable on this type of position. So a good look at a 2-week wide call calendar with the ability to roll that short option to the July 21st cycle before closing if you choose on this type of trade. But a few weeks until that July 28th weekly series also. So good look at a call calendar if you expect this stock to grind higher over the next couple weeks. All right, Kev, we're going to take a quick break. When we come back, we're going to take a look at Google parent Alphabet, which is up nearly 40% so far this year on the back of the tech rally. Stick around, Fast Markets coming right back.
Got about an hour and 15 till the minutes. Barbecues at 30.24. Back to break even on the day. All right, inverse cup maybe being formed here.
Of July, we've been just kind of sideways waiting for the FOMC minutes today, and I think even more so the closely watched data later on this week. We got the jobs report. So I think in many ways, considering the run-up we saw throughout the month of June, the fact that we're down fractionally lower here today into much anticipated, eagerly awaited event such as the minutes, where things could tip one way or the other depending on the verbiage and some of the terminology there. I think this should be considered a win for the bulls still in many ways.
Definitely, Ben. And we got oil up 3%. That's also a big story. We'll continue to follow that one. All right, thanks to Ben Lichtenstein, host of the Future Show here on the network. But now let's bring in George Tillis, senior markets correspondent here on the network. George, talking Google Alphabet, this seemed to be like the unloved member of the Elite Eight as far as the big tech companies, but it's had a nice year. It's been slowly grinding higher, up nearly 40%. But I think a lot of people, a lot of analysts out there are concerned that Chat GPT, AI-based, question and answer is going to kind of replace search. But I don't see them losing any market share at this point, especially to Bing.
Right. I mean, if you think about their market share just in search, it's like 93%. So it's an effective monopoly. You could make the case. I know there's alternatives like Bing, but they still have the largest market share. And of course, advertising spending, which again comprises the majority of their sales, close to 80%, we know was challenged in the first half of 2022, but there seems to be a resumption in ad spending, some normalization in Google's core business, not to mention cloud, which is now its second largest component revenue base by a percent basis. If you consider it as now the third largest behind AWS and Microsoft's Azure. I think for Google, you're right. If you look at the last year, it's been underperforming, respectively, larger peers like Apple and Microsoft, even Meta Platforms, which is certainly more profitable than Google. But nonetheless, I think some of the analysts, for instance, like Bank of America today, which reiterated a buy rating with a 128 target. And if you look at Piper Sandler, they've got a $140 target with an outperform rating from 128. And they actually see some optimized advertising spending on a forward basis, not to mention the fact that Google, which again, there was some major concerns about ChatGPT really taking market share away from them in terms of catalyzing or cataloging search results without actually scrolling through. Google has been integrating, ChatGPT types of technologies in their technology stack, as well as the fact that they're one of the leaders in large language modeling. So I think this is an interesting situation. I think the analysts are looking at the prospective valuation of Google compared to the price performance. I mean, if you look at the last year, it's only up just slightly below 8%, underperforming all of those other three majors that I mentioned. But valuation may be compelling here, considering it's only trading around 22 times forward earnings and around 27 times trailing earnings, which again is right in line with its 5-year average. But it's growing faster on a forward basis, around 9% EBITDA growth. The only one that's growing faster than that is Microsoft, but you can see Microsoft has been a significant leader on a year-to-date basis.
You know, George, when you look at Google Alphabet for our viewers and people that may want to just simplify this process, they should really just look at two main categories for Google Alphabet. That's digital ad spend, right? Which they'll be a major beneficiary if this stock, if overall ad spending starts to tick up as more and more people move away from linear TV and towards streaming and cloud computing, right? The strength in cloud computing, which people expect is going to reach $1.5 trillion by 2030. So digital ad spend, cloud computing. If they get those two right, Google Alphabet's off to the races, George.
I think so as well. I think if you just look at just from a valuation standpoint, I mean, every metric, price to sales, price to book, price to free cash flow, it's trading at a discount to its own historical averages, also relative to its respective peers. But like I mentioned, the only mega cap out of the large five that is growing faster is Microsoft. And I think Google has been underappreciated. I think perhaps the nature of ChatGPT and, of course, the fears around it have really created a situation where we've seen multiple compression in Google, and the price really hasn't performed on a relative basis. But you have to consider, like you said, Kevin, advertising. Digital ad spend is still accelerating. Google is the largest in search. And cloud, I mean, it's been remarkable growth for its cloud computing division. 10% total market share, now just third behind Microsoft and AWS. So this is an interesting situation. I think this is potentially a category of a stock that may be starting to perform better than the other three that I mentioned because it's been underappreciated from a valuation standpoint.
Yeah, definitely compared to those other big tech companies, valuation, modest at this point, above historicals, but not like Microsoft and the others. All right, great stuff. Thanks to George Tillis, Senior Markets Correspondent here, breaking down the news for us. So, Kevin, I'm taking that. You talked about an earnings type play in Tesla. I looked at it the same way. They report on the 25th of July. Google Alphabet does. So I wanted to kind of look at a strategy that takes advantage of a move higher, but you don't need it to blow out 2 or 3 standard deviations. So went out to the July 28th weekly series. So going to capture that earnings event here. And I just looked at buying a straight call vertical. Now, typically, I wouldn't look at buying a call vertical or buying any directional play during an earnings cycle. But if you do believe the stock's going to go higher into that earnings event and maybe past it, this strategy takes advantage of it. So buying the at-the-money strike call, the 122, and then against it to offset some of my costs on that bullish call purchase, sell the 130 strike call. So an $8 wide bullish call vertical here. You're paying roughly a debit of about $2.90, and it can expand to $8. It's probably trading closer to $2.80 right now, but the debit you pay is the risk that you have on it. Now, Kevin, when I look at a trade like this, you want it to go to 130, right? Anything above there and its max profitability on this one, that's 6.5% above the current share price. So offsetting some of the costs, right, Kevin, when you look at a strategy like this, sometimes isn't a bad idea, because if you're buying just that July 28th weekly series, if you're just buying the 122 strike call, you've got risk of about $430 instead of $290.
Yeah, somewhere around $280, Tom, is your risk. And it gives you a chance. It gives you about 26 deltas in Google Alphabet with a very risk-defined bullish play into basically the end of the month, right? 3.5 weeks almost of time. Remember, in a vertical spread like this, you want duration. If you own options, if you need a move, duration is what you're looking for. Do as much as you can. So yeah, you have a chance for just under a triple, Tom, if this were to go from $2.80 to $8.
Yeah, and I like the fact, Kevin, when you look at these examples, buying a vertical and say you've got 3 weeks until expiration like we do on this one, if this stock starts to move higher and it starts to expand in price, volatility should remain firm. You do have that opportunity, if the market's open, liquidity is provided, to close it
Mullen,
ahead of that
54%,
event to kind
still
of
rallying.
it also. So directional verticals can be adjusted or closed if that does take place. That's one of the opportunities.
The volume today on Mullen is insane.
All right, Kev, good look at a directional call vertical there in Google Alphabet.
Look at that. It's already past
that earnings event,
all these super high volume days.
For Kevin and I today here on Fast Market, but stick around right here on the network. Next Gen Investing is coming up.
Definitely one you could jump in on. The rally. Crazy, man. Almost 1 o'clock. Anything we're waiting on barbecue? As far as like filings and dockets and stuff, I don't think so. Like SPY's trying to make a bounce here. Maybe a bounce for VWAP. Maybe not that high. Mullen's just ripping. I'm out in. 14. Nice. Yeah, I mean the chart's been very tradable. I've not been interested in day trading it, but got very clear bull flags going on time after time. So probably some profit taking today, but who knows how high it goes before then. We got some resistance at 20 cents. Probably make it up there today. $15.50. Past that. 16 cents. There's 16 cents. BRFS. This. Was there a catalyst today? Doesn't look very good to me, honestly. I would need it to break above this high and then show it as support. So far, I say it's been a downtrend, then just got either a news catalyst or gonna bounce from that, but it's still below that breakout range. What's going on with that one? 53% on Mullen. 16% is going to be a little resistance on it, looks like. Barbecue 30.23. Barbacoating. He walks at 12.8. So potentially this was the other side of the cup. Now this is the handle that's being formed. I wanted the cup to be the whole day, but maybe not. Oh, Mullen's breaking through that 16 cents. 16.40. Definitely wants that 20 cents. The volume is still just is insane. Over half a billion volume. And we're just halfway through the day. Most of the pumps on Mullen have at least lasted. Seems like they've lasted most of the day. I haven't done like intraday dumps back to where they were. I can see one kind of here. This was a full day. It's a full day, full day. This kind of was one. Not to say you can't dump back down before in a day, but it's looking good. 1685, 67%. Remember when GME used to look like this? 17 cents.
For the FOMO conversation, for the most part, every time the company formerly known as Facebook, now known as Meta, has kind of went at one of their competitors within this space, they've been relatively successful at it, even if not at first. Think of it back to Instagram stories and Instagram direct messaging was sort of almost directly going at Snap. And I can even say, at least for my social circle, anecdotally, at first, it was kind of people were a little bit shy about posting Instagram stories. Well, I don't even have Snapchat anymore. So I think that kind of, at least for my social circle, that can speak to Instagram, Facebook, Meta's success at going at their rivals. But Twitter is so ingrained in the everyday consumer of content's kind of everyday kind of, I guess, step. You want to
70% there on Mullen.
Something funny, whatever it may be that you're going on there and reading the text that's primarily what it is. Twitter is a part of that. Can Meta break into a much more established company's kind of moat? I'm excited to find out, and I'm excited for the conversation. But tons of other stuff, as you mentioned, Jenny, particularly at the beginning of the show. Upvote, downvote, not endorsements, not recommendations. Very automobile heavy here. A little bit of an EV bent.
Definitely an EV focus today, so we'll kick things off with a name I believe actually we have never discussed yet on this show, although it is very, very prevalent in all of our lives. That is Toyota Motor. Now, Toyota Motor here says it has made a technological breakthrough that will allow it to halve the weight, size, and cost of its batteries. This is a really interesting story. Actually, I highly recommend reading more into this because it's fascinating to me. This company does say they're already pursuing a plan to roll out cars with advanced solid-state batteries, which offers benefits compared to the current liquid-based batteries. This is expected by year 2025. But the company did say it had simplified the production of the material used to make these batteries, hailing the discovery as a significant leap forward.
72% on Mullen.
Charging times and increased driving range. Now, I was reading this report from this professor of economics at the University of Birmingham who did say that if these claims are founded from Toyota, it could be a landmark moment for the future of EVs. He said that oftentimes there are breakthroughs at the prototype stage, but there is then a difficulty scaling it. But if this is genuine, it could be a game changer, very much the holy grail of
say
battery
genuine?
vehicles. The company does expect to be able to manufacture its solid-state batteries for use in EVs as soon as 2027. This is according to reports we've gotten from the company.
Mullen still going 75%.
We are seeing a modest move higher today. This name trades a little bit differently than some of the other stocks.
Look for 20 cents as a top.
Given the fact that it is a Japanese-based name, it is an ADR.
Could get some front runners though. Might not make it all the way there.
If you read, and if you're like me and you're an EV nerd and you care about the state of the batteries and these liquid versus solid-state batteries, this is a really interesting article, I will say. Although the
an EV nerd doesn't even have a car.
To care as much as perhaps I do.
This is really interesting because this is a stock that doesn't get a lot of attention. Objectively, doesn't trade that much, doesn't even have weekly options. There are far smaller, more startup-like automobile companies that get way more trading activity than Toyota Motor. Part of that may be due to the fact that it is an ADR and being a Japanese company, and that doesn't go to really say the real truth when it comes to Toyota. Toyota is one of the biggest automobile players in the space. This is one of the most commonly encountered vehicles that you'll see on the streets here in North America.
The second, actually, behind Ford.
There you go. Yet, you don't get a lot of attention when it comes to the financial markets. And that just shows sort of some stocks catch on, some don't necessarily catch on when it comes to trading. But all that being said, I mean, pretty impressive numbers. They reported their North American sales today, as well as a lot of these companies have in the last few days. Up 15%, 26% of those were electric vehicles. Now that was pretty interesting, as we're talking about these legacy players becoming a bigger role within the electric vehicle space. But Lexus in June was up 18.1% versus just the regular Toyota division up only 14%. So still the luxury items are still doing just a little bit better as maybe inflation and other kind of economic hardship is impacting kind of different areas of the economy differently. But we'll kind of narrow these down to the end. They're all electric vehicle names. They're all automobile names.
Your
so
basket weave?
all the stories. We'll talk about kind of why we're selecting the two that we ultimately do towards the end. Next one is Tesla. I mean, this is one that's on the show every day in some capacity.
It's about to begin for the other ones, or Mullen?
Discuss, I'm sure, amongst one of us every single day. But Tesla actually making the most boring move of the four we're discussing off the top here, up about 0.3% today on some news that it, as well as its rival in China, of course, BYD, did achieve record deliveries of their China-made vehicles in the second quarter. Tesla sold just shy of 94,000 China-made EVs in June. This was up about 19% year over year, when their factory in Shanghai delivered about 79,000 roughly China-made Model 3 and Model Y vehicles after, of course, the city ended that 2-month lockdown that did plague a lot of Tesla's productions overseas. They did sell about 247,000 China-made cars over the course of April through June, which was the most since it started delivering vehicles from Shanghai in early 2020. They also reported record deliveries of around 466,000 vehicles globally for the second quarter. But then you look at the rival, BYD saw June sales surge as much as 88% on a year-over-year
You're
basis.
bullish on Mullen too?
Also, this was the first
What is
time
with
that
you
BYD's
guys?
monthly sales surpassed
What lawsuit?
250,000 units in the same time period between April and June. So also good news for BYD, but this is, I would say, more so significant considering the fact
what?
that the companies did see sales surge to the point
They did
where
a GNS?
really, how are they managing to stay ahead of the curve in China? There's so much competition. There's
Oh,
so much
no
right
way.
now.
I didn't hear this.
Say speculation
That's the
on
catalyst for
space and
today?
the pace of the recovery in that key market, that how is Tesla able to compete with, namely BYD? Because of course there's other players, Li Auto, NIO, but it seems like right now it is Tesla versus BYD in all things China.
You know, Tesla,
No
I think,
way.
mature
They're attacking
over the last
naked
few
shorts.
years. It's become equally polarized, but also it's a name that even the doubters and the naysayers give credit.
I probably would have
Maybe
picked
the
some up if I knew the
ultra
catalyst. I didn't think there's any catalyst for today.
relinquished a little bit
That
of
was just the
optimism,
normal
and it's become,
stuff we've
while
seen
still
on it.
polarized and still charged, it has become a little bit
was 5
more
hours ago.
acceptable to be a little bit more neutral. And I thought that the Morgan
Jeez.
Stanley analyst Adam Jonas had a very interesting note on this one. Jenny, 250 price target, equal weight. So again, a much
Post
more
Mike coming
neutral
down.
kind of approach to the name. Post.
Did you hear about the news about them attacking,
But one thing stuck out to
going
me
after
in
naked
this,
shorts?
particular note, and that was that Morgan Stanley sees the
Or illegal
overall
short selling?
EV penetration. So the amount of people switching from internal combustion engines to electric vehicles as progressing at a lower pace through 2030. So this adoption just isn't happening as fast as it was maybe sold to.
It's kind of a crappy catalyst, but in the same sense, it's a catalyst we've known has worked.
Optimistic kind of tone around that was.
Just with
However,
GNS and
Tesla's
Halbiz.
achieving a bigger piece of that pie than many thought as well. So it might be a smaller pie, and these are their words, a smaller pie with a
Let's see
larger
that borrow
slice
fee
going
go
to
up.
Tesla. So Tesla itself is doing really, really well. Just EVs aren't
Yeah, I might pick some up on a dip. I don't know.
Optimistic projections may have thought. I don't think that's all that surprising.
See what happens when we get back to VWAP today.
We got to reassess, but Tesla itself really, really impressive. And I think we've watched the.
I mean, I've played Mullen before.
Next one, Rivian.
A couple times. Last time was when we had this huge volume. And I was like, I just gotta get exposure to this. Something crazy is happening. Now today is even bigger, way bigger. It's almost twice that volume. Probably will be by end of day.
Like, I mean, in Tesla, perhaps, but we did announce.
Mind now them going after shorts.
Announced this arrival of Rivian's custom electric delivery vans from their automotive plant in Europe, with the first vans rolling out in Germany. They did say per this press release that more than 300 electric delivery vans are hitting the road in the coming weeks, joining a fleet of thousands of electric vans that are already in operation in Europe, including more than 1,000 specifically in numerous cities across Germany, per statement we did get from an Amazon
8 a.m.
spokesperson. Now, Rivian Automotive was rising pretty significantly.
But didn't get anything actually pre-market from it.
4%.
That's got to be the reason for this rally, though. And then it just starts snowballing with traders.
After they did report some of their production nearly tripled on a year-over-year basis. They did also just announce
Got a little move there at 8 a.m.
in the period,
But
as
nothing
well as
really
around
like today.
12,000 units. The stock also did jump about 17% on Monday's session, although it was a shortened
I think
trading
we've got our
session. It
handle
was
there.
a very solid one for Rivian, but this not enough to really change the needle in terms of its overall performance. It does.
See if I can
okay,
do this.
I will say, to put in perspective, we do see Mondays, nice jump on a chart. That green candle really sticks out, but stock is still down about 51% off its 52-week high.
Seeing if E-Trade counts as a day trade if I add to it.
I think this is as simple as looking at the
I think it
scale
will, but
difference.
I'm not
We're
sure.
talking about thousands of vehicles when we talk about Rivian. We're talking about millions of vehicles when we talk about a name like Tesla or any of these more legacy players. So it's an impressive step. It helps to have Amazon associated with you when it comes to anything with growth. But this is so far behind where some of their peers in the industry are. So we'll see where it goes. Not really giving much of a pop here. Only 2% for a name that swings around 2%. It feels like on no news at all. We'll see where Rivian goes. Last one here is NIO. Morgan Stanley also weighing in
At the
on this
bottom.
And this one also,
Just because it's like flattened out a bit.
Some of these vehicle figures,
Yeah, 10 cents.
hundreds of
Held around
thousands
that 10
or
cents.
millions
That's
when
true
looking at
for
a yearly basis for Tesla versus tens of
couple
thousands
weeks.
for names like NIO. But Morgan Stanley did highlight the fact that NIO's overall order intake hit a year-to-date high in the past month, between 18 to 20,000, boosted by the launches of the ES6 and ET5 Touring, as well as price cuts. So Morgan Stanley, which now sees green shoots of shipment recovery in late June, that it views underpinning the company's sales target of around 20,000 units in the second half, does maintain its overweight rating, as well as a $12 price target on, of course, NIO shares, which it's right now trading slightly below that by about $1.80 per share. This name is actually the worst performer of our whole discussion to kick things off of the show. It is up 5.5% on the year, but down 56% from its high. Ironically, the best performer on this session, but again, the least exciting from a year-to-date or 12-month basis, Alex.
You know, as we try to kind of narrow these down and really consider, there is no wrong choice, right? But we talk Tesla so much. Just for once, I think setting it aside and giving one of these other names some attention, I think, can be merited. But you know, when you start looking at these, you can make an argument for any of them, including Tesla. I was thinking kind of the two that seem to have the most in common amongst any of these are NIO and Rivian. So I leaned that direction in terms of a conversation, a theme. This is almost a sub-theme. The up-and-comers within this space that still have a ton left to prove.
Yeah, the names that it feels like, right, their valuations got ahead of themselves. We've seen them retreat, both of these names, and now we're looking for sort of that next catalyst to get investors excited again. So I completely agree. I think these two seem the most comparable. So we'll be diving more into our upvotes in both of these names. We'll be looking at some technicals as well as example trades coming up next. Next Gen Investing, we'll be right back.
Very interesting. So, yeah, Mullen's actually been working on it. I didn't realize that. Just reading this article. So they hired, they announced today that they retained Christian Attar, formerly known as Christian Levine Law Group, in partnership with Warshaw Burstein LLP to combat naked short selling activities. Based on reports Mullen has received from Share Intel. So they'd already used Share Intel, which I didn't realize. Maybe we knew about that, I don't know, months ago. But yeah, based on reports they received from Share Intel, the company believes it may have been the target of a market manipulation scheme involving illegal naked short selling of its common stock, and has decided to investigate and expose any potential wrongdoing. So they've already got the intel from Share Intel. And so they have, I'd say, I'd imagine enough evidence to want to spend money hiring an attorney, that's pretty good. According to various public Publicly disclosed sources, Christian Attar, formerly known as Christian Divine Group, in partnership with Warshaw Burstein, have successfully prosecuted and collected millions of dollars in aggregate damages on behalf of their clients from broker-dealers, market makers, hedge funds, and asset-based lenders who have engaged in such market manipulation schemes. So it's not very impressive what they've collected. These guys, like millions of dollars. However, I imagine if, I mean, you could have tons of returns on your stock, like we've seen with GNS. And then, of course, share offerings, they can make money on that, which Mullen will definitely do if they get a good pump. Since our announcement on April 28th, we have been actively investigating naked short selling. We now have enough intel to have the law firm actively investigate and, where justified, take action against any market manipulators using naked short selling, spoofing, or other illegal acts. That's David, that's the CEO of Mullen. So they did announce on April 28th that they were investigating it and hired Share Intel or whatever. I think yeah, because I feel like we did hear about it at some point, but the stock didn't really have a move from it. Usually when they announce that, it also causes a move. Didn't have any move from that. There it is. Mullen retaining outside counsel to undertake analysis of data derived from broker-dealers. I think that's the news right there. Maybe it just didn't spread very good or something. Mullen addresses concerns regarding recent stock performance. Any of these mention them hiring Share Intel? Oh yeah, here we go. These steps include retaining outside counsel, which is working shareholder intelligence services, Share Intel, to undertake a comprehensive analysis of data derived from broker-dealers. So yeah, they did have it, just it didn't cause any movement in the stock. But yeah, they had it, 428. So you bought it on that news, you'd have still lost a tremendous amount of money. So not too late to buy it. It's only at 17 cents. I think I'll wait for the rest of the day, see how it plays out. But yeah, I think I will pick up some. Now that they've seen the data from Share Intel, enough data to want to hire, pay for a law firm. That's pretty good. What is the float now? Float's 243 million. Overstock lawsuit? Overstocks was no, Overstocks was because of the blockchain. They gave out a dividend, right? And that they weren't investigating naked short selling. I think they knew what was going on, but at that point it wasn't really common to go after them specifically. So I think the CEO, whatever his name is, I think that's what he figured would cleanse their stock of the illegal activities. Dude, if barbecue, I don't know why barbecue hasn't done that before. That's the thing. Like, that's always seemed kind of silly to me that if there is, why haven't they done that? Why didn't GME do that? But I don't know. Barbecue's next to do that. I think barbecue will rally without them hiring Share Intel or an attorney or anything like that. Where gold goes? You're the second person that's asked where gold goes. I don't know. But we do have minutes coming out in 40 minutes. See what it says. Like Mullen's starting to consolidate here again. So is this about where I sold out before? No, I think I was even higher than here still. Yeah, I know. That's what I'm saying. The law firm saying they've collected millions of dollars is kind of funny, but the price action we've seen from this is, I think, the real winner. Buy rallying up there a bit.
Strong session.
Oh, pretty big rip there up to VWAP maybe.
So perhaps some hope for those very, very patient, obviously Rivian bulls here. But now we're looking at an example trade today. Alex, walk us through the day trade that leads into some of this momentum, leads into the fact that we are seeing some indicators that are pointing more bullish here with a more bullish example trade.
Yeah, maybe a trader or investor has been waiting.
Yeah,
for signs of
it probably
life
is hard to
in a
get
name
proof.
like Rivian.
That's what share intel's for,
Doubled off
and that's what
the
the attorneys
lows.
are for.
Maybe that's enough for
It's not the
someone
point of
to
getting proof, it's the
garner
point
some
of
interest here in this name,
shorts
given some of the recent
or the
news
nefarious
coming from
activities
Amazon, the delivery of the
stopping or closing
vans,
positions,
in areas of Europe. Maybe that's
and
enough
just
to
seeing the price
bring
action from
some
that. Not to say they
optimism
won't get
here.
back in it once it's all over,
Someone
but
may look at something from the bullish standpoint, from a trading standpoint.
for the
Talking
initial
about $20. So I think
initial
that
reaction,
many more
and as it's ongoing, I could see that
traditional
happening.
purchase of stock probably
Combine that
comes
with the
into play,
momentum
at least
and the hype that
given the fact
like
that,
this stock or
it
other
could
stocks
be
already have.
something more
And we
affordable
saw it happen on
for
GNS, and no one had ever heard of
said, there's
GNS.
still a liquid options
At least not
market,
in my
Rivian
circles.
that is quite
GNS was
active,
not
and
talked
some
about.
risk-defined spreads
Wasn't
in
a retail
$20 stocks the same way
sweetheart.
they can in
That said, I
$1,000
actually do want to get
stocks.
back into
It just
GNS. I
comes
think
down to, of course, being
still hasn't
accurate
filled that gap.
and able to capitalize on those projections. But risk defined nonetheless, buying a call vertical going out to July, looking at the 18.5, 20.5. Rick had talked about the 21 level being an area of resistance. Well, this one peaks out below that 21 level. So just a test of that resistance could be max profit. For a $1 debit, it's $100 in risk to make $100. The break even at 19.5 is below the current share price of this particular stock. So even if the stock just goes nowhere, this one has a chance to at least break even, if not be a small winner. It does, however, take downside risk. So if this does test that gap to the downside, as Rick had talked about, between 17 and 17.5, that would be max loss territory. $100 at risk, but you can see pretty straightforward, elongated Z, break even in the middle, equal risk to reward, and one that is capitalizing potentially on an upside continuation of a really strong start to the year.
Right, and we're only seeing that momentum now here build, obviously with a nice 2% move higher today. But now we're looking at NEO. And NEO honestly looks a lot like Rivian in terms of a year-to-date basis, because we are still seeing shares up on the year, which I want to give them credit because all we talk about is the weakness in these names, Rick, but just not enough to get everyone excited about a name like NEO. So walk us through what you're seeing.
You're right, because there are a lot of similarities, not only between the two companies, but between the two
Hey,
charts
Al.
here as well. To start off, intermediate
Had a good
term
Independence Day.
downtrend, which
Sore
is
calves from boat
a
ride.
little bit into a falling wedge type shape, but
Mullins coming down here. It's got view up at
downward sloping trend line,
14.13.
we broke through our two shorter term moving averages as well as our volume profile point of control. But once again, we're stuck at a resistance level here. About 1050 was where price topped out.
I added to my Zoom
And
calls,
even though
Mullen.
we had these breakouts beyond these
or Al.
technical levels, we haven't really been able to crack that 1050 ceiling yet. We touched it on
Barbecue's
Monday.
just
Today we're
back
getting
to
close,
even.
but we're not quite there yet as well.
Dead even.
So all in all, though, we're up about 47% since these yearly lows near 7. That's about where this rally started. So definitely seeing some strength in this move here, but really it's going to be important to see if once again we can break above these old highs. So it's looking like today we're on pace for an interesting candle. We've got a bullish engulfing candle forming here. So we've got the real body, the distance between our open and our close on the previous day, completely encompassed by today's real body, the distance between the open and close. So we've got a red candle on Monday, a green candle today. Bullish engulfing is usually a sign of strength. That's the kind of candle that would be perhaps signifying further gains to play out here. And remember, it's not a guarantee. This is just something that traders often look for as a signal here. So just bringing that to everyone's awareness that could be happening today if we were to close about where we are now. In terms of our moving averages, once again starting to slope up as well, suggesting the trend could be improving. So all that together paints an interesting picture here. However, RSI trending downward even as price makes new highs. We did have a bit of a reset here where we held on to that 50 midline here that separates bearish momentum from bullish momentum. I think what the bulls would probably want to see would be a break above that 1050 resistance, as well as a break into the overbought area. That would be a sign of further strength. That would kind of help confirm what we were seeing with price. If that were to happen, the next highs beyond that point, our best close was
red
right
candle
here
on
near
SPY there.
271, which happens to line up pretty cleanly with our 252-day exponential moving average. Once again, bit of a gulf here in the volume profile beyond that point if we start getting too far ahead. But there's quite a bit of support to contend with right here, right around the $9 level. We've got our two moving averages, our volume profile point of control, and our short-term trend line. That price would have to slip through all of those in order to open the door to further downside. So that's the level to watch.
Yeah, Rick, I think really important takeaways on two names that have been beaten up, but obviously are showing some signs of optimism here, especially on this week when we've seen a lot of these delivery numbers that were able to please at least.
There's the handle maybe formed.
Been very, I'd say, hard.
Thought it was here, but
we'll leave it there. Appreciate all the insight. Rick,
actually,
our chart master.
kind of an inverse head and shoulders there now.
This name here, Alex, I think considering the fact that the charts do look very similar. This name has not seen the same degree of lift, at least week to date, that Rivian has, but walks in a more neutral to bullish leaning example trade in NEO.
Yeah, much of the same things that we talked about from a strategy standpoint would apply here in NEO. Obviously, it's even half the price at around $10 per share. Certainly an accessible name from a stock trading standpoint. And of course, this the traditional buying of the call debit spread or any type of call buying type of a strategy could accomplish kind of bullish goals for investors if the stock, of course, performed well to the upside. But I wanted to look at sort of the inverse strategy, but still the bullish counterpart in selling a credit spread below the market, selling a put vertical below the market here in NEO to show the other style of trading that you can do with risk-defined strategies.
I'm closing out these puts, daily puts.
On the high probability side and is much more about collection of option premium and less so about
you have FOMC in 30 minutes
and needing to be right. And so selling of the $10, $9 put vertical below the market. Currently the stock is trading at about 10.30, so you got about 30 cents worth of cushion to the downside on this one. And when looking at this, Jenny, I think the interesting piece is you'll notice we collect 33 cents on this particular strategy. At least that's what it was before the show. That's about as close to 1/3 the width of the strikes you can get on a $1 spread. $67 in risk to $33 in max profit is a roughly 2-to-1 risk-to-reward ratio. Break even at 967 to below the market. That is about, let's call it 60 cents below the current share price, which is about 5-6% lower than the current share price. This is one that as long as the stock stays above $10, the anticipation then would be that these options would be likely to expire worthless. That is your max profit situation. That is where you keep the credit and move on. Of course, we're looking at just a single one, so $33 max profit, not accounting for transaction fees, $67 in risk, but the same risk profile. It's just rather than starting near the break even like we were in the call debit spread, we're starting in the max profit zone, and this is one that potentially can benefit from just simply time passing, all else equal.
Seems like SPY will make it back to VWAP. Got inverse head and shoulders here. Maybe even the high of the day.
Important to keep in mind for both of our example trades today. Multiple legs can lead to multiple transaction fees. Short options can be assigned at any time, and carrying option positions expiration can add risk, like unanticipated.
Still think we're coming down to fill this handle, but
now coming up next, it's time for FOMO. So we are talking all things Meta Platforms, which is having a really nice session. Shares are up about 3.2% now, despite the overall market weakness. We'll discuss more why coming up next.
Well, and bouncing back above that 16 cents. Just wicked below it. $1.30. Get a little coffee. Coinbase.
The stock could potentially stall out here in the near term. And they also believe that in Q2, they will actually report their lowest quarterly trading volumes and monthly transacting user totals in over 2 years. So that's why we're seeing a little bit of volatility in the stock. We have the chart up right now. Just take note, we are seeing a pretty significant resistance area at the $84 level. We tested this around 3 times in the last year. So this would not be surprising if we do hit that level and then maybe seeing a little bit of a pullback as technicians are trying to reassess the valuation of this company.
Yeah, Kevin, to me, the most alarming part of this note out of Piper Sandler was the fact that they said crypto prices, the fact that they've been on the rise, this is not translated into trading volumes, which if you're Coinbase, which obviously operates in terms of a digital asset trading platform, that's a huge concern. I mean, you'd think with this surge in Bitcoin and surge in the conversation around Bitcoin, this would be benefiting Coinbase, but it doesn't seem like this analyst thinks so. Although, all things considered, this name is up 120% this year. I know we're nowhere near our highs, but relatively speaking, I mean, they're having a decent year, correct?
It is. Now, this is a really good technical case to be able to look at markets in a fundamental manner here. You are seeing the fact that crypto prices are going up, but volume is staying pretty steady at this point. So if we have, illiquid markets or markets that don't have a lot of liquidity, and I'm not saying that Bitcoin is showing that right now, but you can see where if we don't have a lot of traders acting in the marketplace, that you could have these wild swings to either the upside or downside. That's really kind of what you're seeing right now. It's really an orderly move to the upside when it comes to Bitcoin and even Ethereum as well. But once again, that doesn't translate into trading volume. You'd like to see a lot of trading volume along with the price moving to the upside. That would be a benefit for Coinbase. But overall, we have to also see if the spot Bitcoin ETFs that we are starting to see as far as the applications from BlackRock, Invesco, VanEck, some of the other bigger names out there, obviously that does leave a little bit more credence to the Bitcoin product platform as well as some of the other cryptocurrencies that are out there, but it also could take away some of that trading volume from Coinbase and maybe some of these investors may just rather get into the spot Bitcoin ETFs because they might be used to that. They might be used to investing in Invesco or BlackRock ETFs, things of that nature. So it's going to be kind of a double-edged sword here. You have the validation that some of these bigger names are coming into the space, but you also have the increased competition that could hurt Coinbase in the long run.
Yeah, Kevin, I think a really good breakdown on what has been a volatile name, as we know from following Coinbase over the last year, that technically it's all over the place, although can't argue with the fact that shares are in at least a nice run as of late. But we will leave it there. Appreciate the insight, as always, Kevin Green, Senior Markets Correspondent for the TD Ameritrade Network. Now I'd like to bring back in Alex, and it's time for FOMO. So we're looking at meta platforms, and frankly, I'm so excited about this conversation because it is so bizarre to me. I've always thought it was so weird the way that these social media companies are just trying to mimic one another. I think they should have their own identities, right? Like Snap should be Snapchat, and we should see TikTok as TikTok, and I guess Instagram is Instagram. I don't know what Facebook really is anymore, but they seem like they're all just trying to copy each other, which is, to me, they're never able to execute as well as the original. Like Reels, I don't think it's seen as popular as TikTok. And now with Meta rolling out, they're basically a Twitter type forum. Will this be as popular as Twitter? I don't really think so. Of course, this is premature to say, but I'm excited to see the backlash because anytime Instagram changes anything, people lose their minds.
Yeah, this is a complex conversation because Facebook, in many ways, has constantly attempted to disrupt and reinvent other ideas. Essentially, Facebook itself was a reinvention of MySpace, which was the popular kind of OG social media company. Then it was, of course, Instagram. They purchased Instagram and they kind of adapted. They add Reels, they add stories, of course, in different orders. They changed the way that it's basically used to kind of continue to get you within their family of apps more often, because at some point how many people haven't signed up for Facebook now at this point, at least in the developed world? Not that many. I mean, I tip my cap to any in North America that have made it this far without signing up for some of these apps, because quite frankly, that just makes it more, in many ways, it makes it more difficult. Things like Facebook allow you to, quickly kind of transport information to other apps, keep in touch with people, keep an idea of what's going on, but also think about Facebook within its traditional legacy platform. It has things like Marketplace that have sort of usurped things like Craigslist and eBay. So I'm with you. This is either going to work or it's just flat out not going to. But I think it's also an admission from a company like Meta that some of the things maybe that Twitter's doing are working. They see them as a threat for eyeballs, and if they can get those eyeballs on a Meta platform more often, that is more ad dollars, and in the end, that is what Meta's trying to do, is sell advertisements.
And I think that they're reaching for any sort of way to do that. And actually, I have to say, shout out to my dad, because he's never had any form of social media. He's like a ghost when it comes to online. And I think he's actually the only person I know that ever succumbed to at least making a temporary Facebook, because that is in this world day and age, you pretty much have like multiple forms of social media. But Meta looking to capitalize on that here. Meta's new app, Threads, which will reportedly roll out on Thursday, is being hailed as a Twitter killer, they say. But I was reading this really interesting note that said basically this will be a Twitter killer or not. So it seems like there could be two very different outcomes. I kind of think, of course, we could see some mixed results, especially when it first rolls out. We have seen a lot of misfires from Facebook. They did have an AOL style chat room app, which was
It breaks 20 cents.
It failed to catch on. We also saw
2001's next.
To imitate Snap, fizzled. So,
no, 50's not next. There's a lot of
slowdowns
before 50 cents.
Stealing market share from TikTok. I don't think so at this point. So there is, I'd say, that sort of speculation. What will this actually
20 cents
mean for Twitter, which of course is no longer a publicly traded company?
I mean, this thing has just been destroyed for months. It's like there's not even any. It's just a vacuum.
I'm so excited to try this product, frankly. I love the name Threads.
So it'll start figuring out a range
it has a good
to trade in.
Name, simple. There's no like metaverse tag somewhere in it. Love that. Meta platforms, but this name,
at this point, there's not really any trading range where there's much liquidity until
the S&P 500 year to date, with a well over 100% gain
$2,
and just continuing to get good
like we actually had some trading in there, $2.50. Other than that, it's just been basically selling. I guess like 1.8, $2. Yeah, so I don't. You just have to figure out where it's gonna find a range to trade in. Lots of gaps, of course. The upside. I mean, it's similar to barbecue, but now barbecue. Well, now it's on OTC, so it's all different. But now you see this kind of range where starting to form and trade in, and it's been bullish. So this was us entering OTC, and now we're in this trend.
And you need those who are actually out
there zoom out a little bit.
Or providing content for platforms to be successful.
Given I know Mullen is going crazy right now, but
there's a ton of users on Facebook and
it will slow down.
Messenger, but if they don't make
it will come down days, and
right now on Twitter,
if it is
Threads, it's not
reversing,
so that's what it's going to come down
but
to.
It's not going to reverse like barbecue is, in the sense that it's going to be steady because it's on a catalyst.
For those who are optimistic,
anyways,
on that fear of missing
yeah, you can see this is on a trend up
strategy that would benefit from quite
now.
The upside move. Looking at buying,
but it doesn't just mean it's going to immediately go to $1.
50 call calendar, $1.65 debit would be $165 in risk. This is much more the traditional calendar.
Or it's just another day on Mullen. It's a single day pump, which this thing's seen a lot of. I'll probably get a little exposure though, just because this did have a catalyst, whereas the other days there was no catalyst. It just was shenanigans.
But as the risk profile will show, really just a move towards 350 is what this one is looking
and
for.
it did, I mean, TA wise, it did kind of look like it was starting to bottom. I mean, the lower lows were getting less low basically, and that RSI divergence back here that I jumped in on, and that huge volume, but that didn't end up, it failed. So now could be making an inverse head and shoulders here. We'll see if 16 holds a support. That'd be pretty bullish.
The September call, I think it was somewhere around $5 or $6, so quite a bit different from a risk standpoint, but need to be right on this one. Highly customizable though for someone who has a different opinion or looks at a different stock. You can do a lot with this strategy in terms of adjusting to better reflect an individual's outcome.
I think that's really well put, and of course, a way to look at Meta, which has seen a phenomenal move higher this year, a name that's been definitely one to watch. We will leave it there for our FOMO discussion. Now, coming up next, we will look at the U.S.
15 minutes.
Some of China's
Buy me a little head and shoulders here now.
and how, of course,
So really just chopping. You have inverse head and shoulders,
Amazon, Alphabet,
I'm more biased to the downside.
We'll discuss that more coming up next.
But yeah, waiting on FOMC, I'd say. Yeah, Al, you're early on these plays. I like them, but you're early. There's no confirmation of these breakouts. I see it's setting up for it, but doesn't always mean it's going to break out the right direction. Got inverse head and shoulders down here, which I like. Yeah, good stuff. A long ways out. Jeez. More time. Question was psychic. You should fire. Alright. 10, 13 minutes. Barbecue kind of barbacoating back up to VWAP. Baby steps to mega yacht. Are you going to get back into GNRC? Al? Down to 6.5% today. Huh? Oh yes, Beyond Meat. 7.5? Do it. Do it. Things breaking out. I'm gonna short another column beyond. I have one more I can do. Just a weekly 2-dayer. 14.5. Beyond Meat is hard to borrow. Gorlami. Thanks, Sonny. I know, Zoom and Teledog both are Al's picks. And his price targets makes me think there's gonna be something crazy's coming.
seeing this back and forth. I mean, I don't necessarily love it for the relations between us and China, but I think it's an interesting story to watch in regards to the different sectors that it's now affecting. But we will leave it there. Appreciate all of the insight, Renee Young, senior markets correspondent.
I don't feel like Kathy Woods is getting in on it because of that, though.
It's time for Under 30.
I don't know, maybe.
Looking at Cassava Sciences, that's ticker symbol SAVA. We'll discuss that more with George Tillis, why we're seeing shares down so significantly on the session coming up next.
Cassava, that's a runner. A prior runner. Alright, 10 minutes. Let's see if we get a 10-minute rigged on minutes. Cassava's down 13.5 today. All in 65. VWAP doesn't hold. Look for like, I don't know, 13 cents for reversal on all in. If it even makes it to VWAP, this thing's crazy. Just to how younger days, I'd be interested. So you got stock picks on cutie? $75% going to dark bull. Okay, my beyond short call just filled. Hopefully I don't regret limiting my upside, but yeah, I don't know. Things waking up today though. Got resistance here at 14.5. That's kind of why I originally picked the 14.5 for the short calls. Always roll it.
Familiar with it, the ticker is SAVA. And Jenny, we're going to bring in the brains of the operation here to get a little bit more details on this, but I'm going to be honest, from a headline standpoint,
Jenny,
this sounded like good news to me, but the stock tells me something different, so I got to be missing something.
Right, some positive top-line results. I completely agree. I was shocked to see that shares were lower. I had to double-check my Thinkorswim platform like 3 times to make sure I was seeing this reaction correctly. So we do need our expert here now to break it down for us. I'd like to welcome in George Tillis, senior markets correspondent here for the network. So George, first of all, welcome back to Connection Investing. You were on some PTO, and we are so glad to have you back on the show.
Alps. I've looked at Alps before.
We can't figure out why we're seeing shares of Cassava Sciences sell off. So walk us through that.
Yeah, it's good to be back, guys. Well, I mean, it is a conundrum, but you have to understand
1000%.
Some of these biotech companies, especially companies that are in late-stage clinical trials, in this case, Cassava Sciences is developing neurodegenerative therapeutics for things like Alzheimer's.
This is like on the top of the list for iBorrow.
Which has become a real big problem, especially those that are older. And we know that Biogen itself did get approval from the FDA.
AH9GR? What is that?
2 years ago.
That's on the top of the list.
FDA approved. Now, if you look at Cassava Sciences,
AMC Entertainment Holdings?
Clinical trial in phase 3 for a drug to deal with Alzheimer's in particular, but also
what is
not
this?
necessarily a curative medicine, but it's more of a medicine to slow the progression. That's essentially the target for Alzheimer's disease right now, because we're well off from a cure in that regard. But if you look at the clinical
something to do with
trial
AMC
itself, they did show some positive results, but the sample size was very small. So it was basically a randomized
Barbecue. I'm back up to VWAP. Up 2.3%.
1,750 patients by the end of the year.
This one, Cameron.
They actually had a sample size of about 157 patients that did demonstrate about a 38%
AMC Entertainment Holdings.
in cognitive
Class A.
abilities, when compared to taking a placebo. So it looks like the
1,088%.
trial itself was relatively successful, but there were some questions
This
about
one.
the statistical significance associated with that small sample size in that randomized trial. And I think that may be one of the reasons why we're actually seeing the stock traded as to the downside, despite the fact that looking at the headline, all else equal, it looks really good from the standpoint of showing cognitive improvement.
Yeah, Mullen's holding out pretty well up here.
A less
Got a
pronounced cognitive decline.
nice little flag setting up, maybe.
That did take
I think it still make it to VWAP, but
in a randomized
see.
trial.
So I guess what I'm hearing then, George, is we're talking kind of a relatively small scale, trial here. Results were promising, particularly for what this potential pharmaceutical is seeking to do, which is slow the progression of that cognitive decline associated with Alzheimer's disease. But I guess the other thing would be is that it's promising. We're not completely there yet. The concept's still relatively a question mark. We're going to get more answers with the bigger trial. But then also, is it that this still has a ways to go? It seems, from my understanding, this is what this company is. This drug is going to work, or they don't really got plan B, where I think you said it was Biogen. Correct me, though. I mean, that's not the only thing that Biogen's working on. So this is one of those situations where it's really important to understand these companies, where they're focused, where they are in these trial stages, and knowing that these are on the calendar, because this stock can move around anytime there's an update.
Yeah, this is a company that's in development. If you look at its revenue, it hasn't generated any, but they are expected to complete that clinical trial in terms of enrollment by the end of this year. What I went and looked at is in 2024, estimates by analysts, there are a few analysts that cover the stock, estimate $100 million in sales by 2024. So right now, based on analyst estimates, there seems to be more promise in Cassava Sciences developing this drug and, of course, submitting it for FDA panel review and eventually approval on a forward basis. So it's important to note that they don't have drugs in distribution. Like Biogen has multiple drugs, and they can afford to miss on a particular drug, whereas Cassava Sciences really can't. Now they do have other medicines in development, and one thing they have in development is not necessarily medicine. It's actually a diagnostic test, a blood test to help detect Alzheimer's in patients. But that may not necessarily be enough for the business itself to continue operating as a going concern if they don't get approval for their drug in which they're in their phase 3 trial. And lastly here, I always talk about balance sheets and cash burn. Now the company's market cap is about $1 billion. They have about 187 million in cash on the balance sheet, and they're burning about 90 million per year based upon last year. So it looks like they have about a 2-year runway in terms of cash on the books, which again can precede the need for a secondary offering. But you also have to consider the trend, because if you look at the trend, in late October, it peaked around $50 or so. It's been in a downtrend since then. So you can't fight the trend as long as the stock is trading below its 50-period moving average and is sloping down. The trend is still to the downside.
Yeah, George, we'll leave it there, though. A really great breakdown on why we're seeing shares lower, obviously, today in Cassava Sciences. That will also do it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
All right, 2 minutes. Probably gonna put on Stock Market Live for the minutes.
Kind of amazing. So if you started July 2021 and you just started this, if you half-assed the portfolio and quit after the market got worse, you would still be up 5%. And then if you held it, you'd be up like 30%. If you took all the other purchases, if not more, if you took the other plays and added with it and everything else. But pretty wild. I think I could get her. I'm looking at the mix right now of what there is. There's a Uber and JP Morgan, so that's dividend. Airbnb. Yeah, I guess she kind of needs more dividends.
All right, 1 minute.
Just stacked cash, pretty much. It's actually cool it happened that way. Yeah, it is. Oh, yeah, 45 seconds, chat. So get ready. Get ready. And go to the Fed website. Again, everything I just told you, that is where you're going to want to be. The minutes are getting. We're not even getting a move. Watch the bonds again. So 20 seconds. Just look page 9, page 10. That's where I'm going to go to right away. We'll see any headlines, and then that's it. Analysts, the Fed minutes will be informative around the characterization of the June meeting. So get ready. 10:59. Okay, wait for it. And here it is. So again, it's you guys see it all on the wire in front of you. Here are all of the headlines, so I'll read them one by one. Damn, we have all of them. So here are the main algo headlines. Minutes, almost all officials favored holding rates steady at June. Some officials favored 25 increase at June. That's kind of hawkish. Almost all officials noted that the SCP, the additional rate, would be appropriate in 2023. That's hawkish, and that is, again, maintaining that messaging. Most officials said additional information is valuable for considering stance of policy. Most, so not all of them. Interesting. FOMC officials said GDP resilient in recent quarters would be subdued over the rest of 2023. FOMC minutes, core inflation has not shown sustained easing since the beginning of the year. Banking stress has receded. Conditions have improved since early March. That's positive. FOMC minutes, debt ceiling resolution removed source of uncertainty of the economic outlook. Staff still sees mild recession later this year, followed by moderately paced recovery. Interesting. So this one, I think this one goes back and forth, actually. That's kind of weird. Again, they're saying
move back up. You up there on SPY?
I think Powell said last time he didn't, and then the time before that they said it was fine. And then minutes, staff saw possibility of avoiding downturn almost as, okay, there it is. There you go. This balance. I was like, okay, no. It balances each other out. So pretty much they said staff sees mild recession this year, followed by a moderately paced recovery, but they also see that they could avoid the downturn just as likely as a mild recession. Do you guys understand? That's fucked up. So they're saying, listen, man, we really think there's going to be a recession this year, but we are also as equally thinking that however much a recession could happen, we also think you can avoid it. It's like they're telling you they're agnostic. He said 50-50, Habibi.
Big wick up there.
We have a recession, but we could also just as likely not have that recession and recover. So I do think we could have a recession, but just as likely I think we're not going to have a recession. Again, that's from there. Again, those are the main headlines. So that's just like the algo ones right away, but let's get into it now. I'm going to read the thing. But honestly, baby reaction, no reaction on the bonds. It seems just as hawkish as last time. Again, all members, nobody is debating more hikes in the future. They're saying
the premium got wrecked on. That was an Ivy crush for sure.
Economy, no recession, maybe a recession, but the communication is hawkish. Forward reaction is
should have closed more before it.
Of what we got. And so far, let's see though. Just someone keep an eye out for rate hike odds or anything else if they move. And that's just the quick algo read. So let's get into it and see what we could pull up. Again, page 9. It should have it though. Every single one I read you here, just some, all, many. That's all we were looking for. But it's a shit show. They're playing the same Powell game. They agreed inflation was high. Noted that the data in the CPI for May, inflation had been slower than they had expected. That core had moderated. It has slowed. Few participants pointed to upside risk to the outlook of housing services. Side with near record low inventory, solid housing demand. Yeah.
Hardly any reaction there. Just a couple wicks to both sides.
Again, few participants pointed towards upside risk to the outlook. So a few people, there's 3 people on the Fed. 2 or 3 people on the Fed are like, hey, man, there's mad low inventory. You know what I'm saying? Like, that's it, man. You have a lot of low inventory and solid housing demand. So just say only 2 people on the Fed, 2 or 3 tops, pointed that out. Some marked that core non-housing had shown few signs of slowing in the first few months. high degree of uncertainty regarding cumulative effects on the economy from both enacted monetary policy. So yeah, again, while most participants agreed to maintain the target range for the federal funds rate at 5% to 5.25%, some indicated their support for a rate increase. The Federal Reserve's June meeting minutes revealed division among officials over the decision to pause interest rates, with some favoring a 0.25-point hike. The decision to leave rates unchanged while forecasting higher rates. Hold on. Forecasting higher rates later this year left the Fed weather watchers confused about the general direction. Powell has since clarified that a strong majority support more rate increases. Honestly, it seems like a dud, low key. It seems hawkish. And then Powell again. You had Powell clarification following it. The minutes also discussed concerns about inflation, the bifurcation among officials regarding price indexes, and the staff's economic.
That's my browser lagging out that you're hearing.
Recession,
so annoying.
By a moderately paced recovery, with an equally likelihood of not going down and having a recovery. ChatGPT says neutral. I would say it's recently hawkish. It's definitely, there's hawkish leaning. Again, that little recession comment is a little better, but it's not. In the context, I think it's hawkish.
Okay. Thanks. That's Stock Market Life. You guys want to show them love?
Said little evidence of inflation being on path to returning that 2% target over time, and it looks like the participants stated that upside risk.
Mullen started to come down there during the pump on SPY, but it's back up in his flag. Zonk says Golden Cross.
So, again,
time to moon to like $35.
I think the fact that some favored hike but went along with pausing here again really signals the ability.
Are they talking about the normal Golden Cross, like 50 and 200?
Uniformity in the meetings here, but also for how we're kind of still interpreting the situation that we're in.
This is getting close. Again, you can have it, and then it kind of comes back down though.
Should have continued to raise rates.
It's fighting it for sure.
To expect, I think, come later this year. Now, lastly, I want to point to some of the data that we saw overnight, Nicole, globally suggesting that
would definitely be a good longer-term uptrend indicator.
Conditions in China,
we had the death cross 2 years ago on it.
So that's going to be a factor to consider in terms of the Fed. But to your
that is pretty much once it stopped.
Friday is going to be the next big focal point
ending up
for us to keep an eye on, Nicole.
Yeah, and they were talking about the higher rates on housing bottoming out and the upside potential, as you said, that is the concern, the inflation risk to the upside, that it could just rear its head one more time as it came down from 9.
It'd be a big like inverse head and shoulders here on it. I look at it as a normal stock now, not something that goes crazy anymore though.
It could just once again, and that's their idea why they want to continue to raise rates. In the meantime, you have so
yeah, it is. It's this cross. It's this green crossing over the blue. Green's a 50 moving average. The blue's a 200.
You know, things are going in the right direction. There's a lag effect, and the lag effect is something that Jay Powell has acknowledged.
Yeah, and I think that's what kind of has us a little bit on edge, right? It's ultimately, will we start to see the economy slow?
We'll see if it holds above it. It has crossed over at this point though. High's coming up a little bit there. Barbecue up above VWAP. Look at you.
Again, I think
3.5%.
comes down to labor conditions here in the U.S. As mentioned, it remains very strong, very tight still for the most part. We've seen it. Jobless claims on a weekly basis start to inch up ever so slightly. That
Liechtenstein
average inching up, but still well below that 300,000. It seems to be a psychological level. So not only the non-farm payrolls this week providing further insight.
I'm trying out for a role in a World War II movie.
Situation here in the U.S., but tomorrow we'll also
I think it's going pretty well.
We get the jobless claims, the Challenger, the JOLTS, which will probably look at the job openings. So kind of well-rounded picture if you're looking at employment still to come this week. And then, as mentioned, you get the wages component also. All this ahead of some of the closely watched data next week as well. But yeah, definitely.
That inverse head and shoulders.
I want to point out that the RBA went ahead
maybe move to VWAP with that.
Earlier this morning,
we are at VWAP. See what happens next.
They could raise a quarter point to 4.35, but I think this is all just sort of intertwined as far as central bankers having put forth a significant amount of effort to kind of slow economic conditions, but they don't want to go too far, right? So they're trying to balance those risks at this point, kind of really trying to fine tune where things are as far as the rates and the impact they're having on
8% on Beyond Meat. Oh, did it not? Yeah. Looks like it slowed down. Thought I opened that short call.
The unemployment rise and the economy slow down more, and that's sort of the idea. That's the downside risk if they keep raising rates, and that's what they're watching for. I mean, GDP came in and surprised us. So there's a lot of push and pull. You noted what's going on in China with the PMI. That's not great news. So a lot to digest. Ben Lichtenstein, thank you so much. Always great to see you.
Generac down 7%.
Now let's take a look at the bigger picture. Lorene Gilbert's with me, CEO Wealthwise.
Got a gap at 131 on it.
We're hearing some of the calls out of
And a gap at
Fed.
103.
A lot of it is what we expected, and they are, cautious here. They said a mild recession could occur that is likely to start later this year. Those were some of the things they were talking about. Anything standing out to you?
Yeah, I think that the Fed has to continue to talk tough and continue to put in our heads that they're going to keep rates higher for longer and to not expect rate decreases anytime soon.
True.
They definitely said that. And so with that, we are also expecting at least one more rate hike, maybe in July. And then the question
Spy's pretty choppy today.
One also
No,
later in the year.
felt too bad. Like I missed out on something.
That rates are going to be higher.
If we get a
for longer,
test of the low at least,
while we try to get
it'll be a
back
pretty good
down
day
to
for the
that 2% target,
dailies.
which Powell has made clear is going to take quite a while. He doesn't think it's going to happen, in fact, until 2025, which would mean keeping rates restrictive for longer until we see the effects of the economy slowing, which in fact leads us into the most probable scenario, which is going into recession later this year.
Right, understood. And that's what a lot of people are talking about, the recessionary environment that could occur. And that is part of the risk that is evident. However, that the market has in fact maybe bottomed. I mean, what say you? Can the economy dip into a mild recession, which is the word they used as what they see as a possibility, a mild recession, and not go back to those lows that we saw back in October?
It certainly could, Nicole.
Is it weird though, Cameron?
When we're looking at earnings per share expectations,
Sounds like pretty normal to me.
and what's been priced into the market is a pretty robust 2024 and 2025. So if we start seeing analysts keep revising downward on expectations, then there would be a repricing in the markets. And I think that is the greatest risk, is that there still could be more downward pressure on consensus with earnings per share. And if that happens, then we'll see markets adjust accordingly. And I think the biggest area of the markets that could adjust is in the technology space, which has grown so substantially once again, so that if we continue to have higher interest rates for longer, and then we have consensus expectations being revised, we could see some of that decline.
Right, understood. So when we talk about asset allocation, is there anything that you would be doing to adjust a bit? People often look at their books quarterly, or people who trade more often will look more often. But is there anything you might be doing here?
Yes, after two great quarters in the market, we have been rebalancing portfolios so that we take advantage of the gains that we've had so far this year, and specifically looking at small cap, which has rallied, and now looking to pair off some of that. And then also, declining areas like consumer discretionary, where we feel like there is more risk and we can see a rapid decline in that area of the market as we head towards a recession. So being mindful of the areas that would be more impacted during a recession, also just taking profits and looking at areas of the markets that we feel like could sustain well during a recessionary environment, like more of a value tilt. So even though we've had a balance certainly between growth and looking at AI opportunities, but also
Barbecue right above VWAP, kind of 31.25, up 3.5.
Right. I mean, when you talked about small cap
IWM calls.
taking some profits there, where does small cap fit into the picture here?
That's been lagging, I do agree.
Small cap is definitely a great area of the markets.
However, what if SPY and NASDAQ come down now? I'm thinking more of that than IWM catching up. I think SPY and NASDAQ catch up to the downside.
So that there's, because when a recession does hit, the smaller cap companies do get hit even harder. And then areas the market also, specifically that could be in that small cap area would be biotechnology. And that area is somewhat frothy, looking to, diversify from there.
Yeah, understood. And then when you look abroad, is there anything interesting to you abroad? Do you like to dabble international? And would you do the same SMID cap sort of sectors, small and mid caps, or is there something else you look to?
Well, looking at both developed and emerging markets when it comes to international exposure, as well as on the bond side, on the fixed income, looking at international bonds, we've liked emerging market bond holdings as well. So definitely an allocation there. We do think that given where we are in the economic cycle, we do think that you could diversify and look abroad, and with more
coming down
towards developed international and maybe a smaller weighting towards emerging markets. But we definitely like the international story and think that diversifying from here at this time would be a good idea. We were underweighted international last year and have brought up our weightings this year as we see it's more favorable now.
Laureen Gilbert, thank you. Wealthwise Financial. Good to see you, Laureen. Thanks. Later this hour, Dolly Lens.
There you go. Holy flush. Look at that thing.
About the housing market, how it's defying all those expectations of some sort of crash. Seeing something.
You're testing this level here.
Also, we'll take a closer look at the ETF trends,
Sure if there was news. Whoa.
Some big winners.
That looks like news or something.
Our panel will examine some key consumer.
Is that from the minutes?
Holiday weekend. And up next, we'll look at how key sectors are adopting blockchain technology, what that means for companies such as Visa and Pfizer. Stay with us.
Okay, I sold another one. I don't know if that's news. It could just spike back up. That was weird. Okay. I actually averaged back into them up here, so now I'm going to see. Yeah, that doesn't count as more than one day trade. That's crazy. That's really nice. Yeah, I might, let's see. Yeah, I ended up with the same amount of contracts because I bought back in the same ones I sold down here. Could have sold them for 40%. I sold them for like 20. But I averaged back in, so same amount of contracts now. Now that we've broken through this low, thinking maybe we could low the day still. Oh no, unless that was from news. Kind of blind a little bit without our Twitter bot going. I could have sold more there. Dang. All right, I'll wait. I'm not sure what that was. Pretty big flush though for such a mellow day. Oh, nice. You're doing covered calls on it. That's true. If I buy shares, I could start theta farming it. Dang, this is the way. You can get 3 cents for 50 cents. That's amazing. I almost want to just buy shares already to start selling those. That's a ridiculous upside if you actually get assigned on those. Nice play, Passing Cloud. Sold August for 5 cents. Nice. Oh my gosh, that's great. That's what I can't wait for barbecue. That's like what I'm most excited about. If it does get back into the dollar range, dollar higher, is just selling calls on a large position. And with high IV. Ooh. Get that theta farm tickling inside of me. 950 million, is that what it's at? Yep. Gonna hit a Billy. Billy. Don't be sad, lords. Barbecue's at VWAP, 31 cents. Yeah, August at 6 cents. I saw that. Yeah, I'm talking about selling calls, lords. But yeah, I think we'll start to see some exercise calls around 50 cents. But that's only if people had them, because I know you can't buy them anymore. Oh, and they got rid of the weeklies? Wait, why is it's just quarterlies on here now? What? That's weird. How did they just get rid of all those strikes? Alright, Mullen's now coming down. Yeah, I mean, if you have enough time, I don't know how they got rid of the weeklies and the monthlies on barbecue. How's that even possible? And why would they just get rid of those and not all of them? Oh geez, these dailies are ripping now. Yeah, now they're in the money because I had 442s. That is neat. Just selling off like one at a time here. Still think we'll hit low of the day and maybe even through it. I think I'm gonna hold my puts for tomorrow. SPY's down 0.3 now. Dude, the dailies just swing like crazy. Gotta fix my browser. Anybody know what it is? Mullen, almost back to VWAP here. We're taking SPY puts and putting them into some Mullen at some point. SPY puts profits. SPY puts profits. Commerce Department saying they oppose China effing the US on gallium and germanium. I don't think there's any news, yeah. Kind of an aggressive sell-off though for how slow today's been. Maybe there's something more in the minutes that someone found some wording. It was shockingly hawkish. Okay, I sold another one. You really have to sell into strength here. That's crazy. From 80% to 10% in a few minutes. What is this line from? What a weird choppy day though, really. Look at SPY bouncing there. Now I know I can add to my puts, which is kind of nice. That'll help me get out of them easier. Yeah, I'm picking up some Mullen shares here. Very small starter position as capital demands. What? Saying I can't. I'll wait on Mullen. Buying power is weird. I'm still holding the futures, so that pulls over quite a bit of buying power. Do have some buying power on here. I'll pick it up over here. A very small starter position on Mullen. If it breaks VWAP, try and pick up some more at that 13-cent level. Like there's an actual catalyst on this rally today now. Barbecue right around VWAP. Lords. Trying to shill off your 50-cent leaps. Five to 10% move? Dang, dude.
About foreign buyers and how much they can buy and such. I'm sure some of these buyers are foreign buyers, and if you have anything to add to that, that's fine. I mean, I'm not an expert on that, but I would like to talk about the mortgage rates, which you touched on. They're off their highs, but they had trickled higher during the month of June, near the end of the month, right? But that didn't deter folks.
It didn't deter them at all. And in terms of foreign buyers, so right, Florida's been a little quashed on that by 7 countries being watched and whatnot. That's obviously going to put a pause on those buyers. They don't really want to jump in while that's going on, even if they can get around it, which they generally can get around it. But New York has had a lot of foreign buyers. So summertime is a great time for a foreign buyer. They're coming into New York. They're here from China. They're here from London. They're here from Paris. I know what's going on in Paris. They're here from all over the world, and they're buying property actively.
Right, things look great. It's green. It's not the winter where things are looking
Right,
terrible,
depressing. Yeah, exactly.
and they are here and they are buying. So obviously, good for us, good for our sellers. And next year, we don't really foresee anything to change. Maybe pricing will come down a bit, couple percent. A lot of economists are predicting that, but we see the same thing for next year. Hopefully mortgage rates come down a little so that, that first time home buyer can step on the property ladder. But we see the same thing pretty much going forward.
Yes. And it's just crazy that they literally just, again, can't kill the buyer.
One time we spoke, not the last time, but the time before that, you came with a list, and it was, I don't want to say gloom and doom, but it was more realistic about folks facing higher mortgage rates, low inventory, worries about their losses in the market. Just things weren't moving and rolling. With a mild recession being likely, according to the Fed minutes today, how likely is it that the housing picture could change? Because right here, it's sounding a lot better, isn't it?
Well, the problem is that, again, what we said before, that the golden handcuffs keep sellers in their homes, and therefore there's no inventory. With no inventory, there's not going to be a lot of sales, but the sales are strong.
You know what it might actually end up being?
The sales will be at high prices.
I'm still selling the first contracts I bought.
Even if they can make a lot
Once I start selling the second ones I bought, that's probably where I'll get the second day trade.
Somewhere else and pay that 7% mortgage.
Yeah, that's probably what it is. I didn't even think about that. It's first in, first out.
It makes sense for them to sell. So that's why we're seeing that sales will continue to happen at high-ish prices because there's just no supply on the market.
And the secondary home market, for example, I heard that a lot of the Hamptons homes
I
that
had
were
two at
actually
the
bought
end.
for investment
Okay.
properties, they put out some really
Yeah, I'm not gonna buy any more because I think that's probably the case.
costs saying, rent for June, July, August, but they were astronomical and they were left with nothing in the hand. And as a result, got caught with that. How's the secondary market? I mean, is now the time, and I say the Hamptons because that's the one I'm most familiar with, but you could tell me about other areas. Is now the time to try and buy it?
Rallying up here a little bit.
Generally not the time to buy a Hamptons home. The Hamptons is seeing definitely a bit of a depression, so to speak, in prices and rentals and everything. Because people are exploring and seeing, they can go to Hudson Valley, they can go
Washington,
Connecticut, so many places. They can go Delaware, there's so many nice places you can summer, and they're exploring those are much cheaper. So that's one of the problems with the Hamptons. The other problem with the Hamptons, it's so expensive. So expensive, not only to buy a home, but to maintain the home. You pay $1,100 a week to have your pool serviced. It's just insanity. And that's going to keep most people out of the Hamptons, right? And they're finding other great alternatives. Good for them. Other secondary home places, so whether it's wintering or summering, right? We're using all verbs here. Florida is hot as hot could be. I don't think it could get any hotter. The little bit of inventory that's on the market seems to be scooped up immediately. And Jersey Shore, very hot, oddly, right? So it's not like the Hamptons. The Jersey Shore is very strong market, rental and sale.
And when it comes to the Hamptons as well, I think people are still always thinking about COVID, right? And still wanting to travel and do other things and not necessarily like when I was growing up, go to the Hamptons June, July, and August, park your kids there, right? They're still wanting to travel. And when they're traveling and talking to all their friends, they're also exploring, like Dolly said, into other areas that are much cheaper. So I think the Hamptons is going to have problems in the future holding up those prices, especially if they don't get the rentals, right? Because the rentals do speak to the prices. You're getting $100,000 for June.
Up some more Mullen on the other account.
If you're not getting $100,000 for June, then that does speak to the price of the home.
Yeah, exactly.
Got it. And this limited inventory is keeping housing alive, so we don't have to worry about a crash at the moment, according to what you've said and what we've seen. That's just really the situation. Thank you.
The only issue with the crash really is that people, if they don't make their mortgage payments, right, in some parts of the country, we're seeing that, right? There's a few more of those people on watch lists, of not paying their mortgages. If those go under, then obviously there's going to be a problem.
It's a high region for VWAP, it looks like.
Wonderful to see you both always, Dolly and Jenny. Really appreciate you coming on always. It's always a great conversation. Dolly Lenz, Jenny Lenz of Dolly
Ooh, should have sold the calls again.
for being here
Well,
on the show.
first time it was 36%, I think it was a high. Second time was 40%. This time was like 85.
For 2023, we know they've been winners so far. Now what?
I sold some on each of them, but or no, not in the first one. I sold some here, but then I actually reloaded up here, or like right here. Sold some more here. Just sold more though. That 85. I don't know. I was kind of thinking low of the day still, which I still think we could hit, but it is a pretty big bounce now. That's more than a handle. This is a inverted cup that it built. Just a choppy day. And kind of an invert head and shoulders down here. Head, shoulder, shoulder. Still rallying here. Mullen's still hanging out above VWAP. And there's a move back to VWAP. Crazy. Came back up almost as fast as it went down.
At this point. All right, good news there for GM, and I guess people are still getting out there and buying the cars. Some of the prices had come down, so that was good too. All right, Caroline Woods, thank you so much. Now let's turn our attention to the ETF market.
Mullen bouncing up a little bit there.
As we begin the second half of 2023, taking a look at these trends. Aniket Ulal, VP, ETF Data and Analytics at CFRA. Thank you for being with us.
All the way back to VWAP.
Are you know, ETFs really still so popular the way they've been? How do you quantify this?
Drops up 2.8.
ETFs still continue to be popular.
AMC's down
We haven't seen
3.6.
the inflows this year that we've seen in past years.
Peloton's up 0.5%.
Explanation for that is money market funds.
Runs up
sold in a lot
0.5%.
of assets, took in a lot of assets this year. But as a product structure, ETFs continue to be
Lyft is up
popular. They've
0.5%.
certainly taken a lot of share from mutual funds. In
They say
the
for
first
one.
half of this year, ETFs have taken in just over about $200 billion. That's a fairly significant number. Again, less than last year, but fairly significant. And we've seen a turnaround in this year itself. The first quarter was really weak, but the second quarter was much stronger. And we've seen active ETFs, in other words, ETFs not linked to an index, really be one of the strongest segments of the ETF space, taking in almost
SPY
$40
at
billion.
VWAP
So
now.
overall, it's been still healthy growth, but not as strong as last year or even as expected at the beginning of the year.
For example, tech has really led the way overall.
15 minutes to power hour.
That has been the case for ETFs too. Have you seen a lot of interest? Are people taking profits?
We've definitely seen interest. As you know, flows tend to lag performance. When I was in your show the last time, we talked a lot about money moving into defensive strategies. We talked about gold. We talked about quality. Now that performance has been strong for a while, ETF flows are catching up. So investors are moving much more into tech, into growth-oriented strategies, much more than they were earlier in the quarter. And as you mentioned, tech and growth-oriented stocks have been one of the stories of this year. If you look at from an ETF perspective, the technology sector spiders is up 40%. ARK, which tends to be a bellwether for growth stocks, is up about 43% this year. And that performance has certainly led to some investors moving back into more offensive risk-on type strategies, as opposed to where we were even a couple of months ago.
I wonder too if the way the market behaved in 2022 spooks folks, and if they had a particular equity or whatever and they got hit hard, maybe that's why they like ETFs, because they're a little more broad-based, right? You're not all your eggs in one basket.
That's absolutely true. I mean, ETFs, even though there are now much more concentrated ETFs available, in general, the assets tend to sit in funds that are much more diversified, low cost, and you're taking on less risk, as you said, compared to individual equities. Of course, you may be giving up upside in particular names, but overall, it's certainly a more broad-based, diversified way of investing, while still being able to express views on particular sectors and themes. I think that's benefited ETFs. The other thing that's benefited ETFs is the ability to move into products that either, for example, defined outcome ETFs where you can cap your upside, or move into quality-oriented ETFs. So there's a more range of options now available.
Oh, that's where I got that 442.35. Jeez, that was a big bounce on that. I couldn't find out where I put that line from. It was the shoulder, back from his head and shoulders.
You might see the Fed still
back in 616.
Where does that fit in? Because there are
Dang.
actually bond funds too. When you talked
I mean,
about
that's where we had that big
investing,
bounce.
I mean, there's Bitcoin, right? You talked about
Yeah, I
tech.
saw it, and it was just like
You had XLK. I mean, just
too
what
slow on
seem
the
to
trigger
be
to
the
close.
hottest themes?
I was
Well,
wanting the
as you
low of the
said,
day
the
too
Fed
bad.
has signaled that we may have even 1 or 2 rate
But
hikes
that was a nice
still to go
nice
here. But
support
I
to
think
catch. I mean,
investors are
this
purely
long would have been
working a little bit
a
beyond
couple
that. We
100% too,
certainly have
right there.
seen
The
investors
big
on the
bounce.
fixed income side take on a little bit more
Got an
duration
engulfing
risk.
candle there.
DLT, which is a long ETF, long duration ETF, has been one of the
Jeez.
highest asset gatherers this year. So investors are coming back a little bit into more taking on more credit and duration risk on the fixed income side. And as you said, on the equity ETF side, if you take the top 15 best performing ETFs this year, they're all related to Bitcoin or crypto. Now, that's not entirely just risk on. I think part of it is to do with what's happening in the Bitcoin space. We have seen recently BlackRock applied for a spot Bitcoin ETF. Over the last 10 years, the SEC has rejected almost 70 spot Bitcoin applications. But investors kind of feel like this time is different. BlackRock is, of course, the world's biggest money manager, has a huge track record with successful ETF applications. And they also included clauses in their application, like a surveillance sharing agreement, that weren't there in previous filings. And so there tends to be a little bit more optimism now around the potential of a spot Bitcoin ETF being approved. Although I think there are factors that have to temper that optimism. So the jury's still out on whether that will happen. But certainly investors have been more optimistic about Bitcoin than they have previously for a long time.
Yeah, I'm so glad you addressed that, because I was going to ask you exactly that. How likely is it that these spot Bitcoin ETFs, and BlackRock in particular, which has given a boost to this market with the announcement that they were moving forward with that, how likely was it? Because the SEC has squashed some of the other applications. So, but as you said, it's BlackRock, and maybe something different could come of it. We'll continue to follow that story. Thank you so much, Aniket Lal. Great to see you. Thank you very much. CFRA. It's time for our midday panel. Let's take a look at what went on with the shopping trends over this July 4th holiday.
Fly above VWAP now.
Grocery. Who hit the grocery stores? Chris Graja is with us, CFA, Senior Securities Analyst at Argus Research, and our own Kevin Green, Senior Markets Correspondent here on the TD Ameritrade Network. Chris, what happened? Was it good news?
I think it was pretty good news. I mean, one of the things we've been looking for is we're
Falling
seeing
back to 16, just over 16 cents.
People are a little bit stretched in their
Pretty big
budgets,
support there.
and you kind of need, major events, whether it's Mother's Day, Father's Day, 4th of July, to get people out and give them a little bit of a catalyst to spend. The weekend was probably a little bit hard to read because, it wasn't a traditional 3-day weekend where you get the big crowds shopping on Friday afternoon. So it was a little bit more spread out. We'll talk about some of the trends. I mean, one thing that surprised me, disappointed a little bit, is we didn't get more evidence of event shopping for Juneteenth. So hopefully in coming years, the retailers will make it more of a celebration, and people will embrace the holiday in terms of, both employers giving people the time off and people realizing that it's a significant holiday that should be celebrated. Walking the stores this weekend, Walmart's always the big one, and still when you walk into Walmart, that main
I want people to celebrate Juneteenth more.
Is still filled
The
with
recently made holiday from the
rice,
banks.
beans, and cooking oil, ramen noodles. All
I
kinds
celebrate
of
it by
things that
fasting
suggest
and
that
staying
the core
home.
customer is really stretching to make ends meet.
Yeah. Look, I mean, there's no doubt that we've had a more selective customer. The Fed in the minutes noting consumer spending stronger than expected because consumers are somewhat resilient, but they are tighter with their money, and their credit card rates have been going up, and they've been digging into the savings. That being said, they're still spending. Kevin, what were you watching as far as trends after this 4th of July holiday weekend?
Yeah, actually, really looking at what are consumers actually buying. I think Chris did bring up a pretty good point here. When you're talking about the staple goods, that's been really the bread and butter when it comes to a lot of these grocery store companies and some of these retailers as well. Walmart's a really good example, really a hybrid between a grocery store and a consumer discretionary type of business here. But we are also looking at the commodity prices in themselves. Now, stores usually are not that dynamic when it comes to pricing meats and things of that nature to spot prices, but we tend to actually see a rather significant adjustment once we get around these holiday seasons because of the impact that it could have on margins. And so some of the areas that I've actually been keeping my eye on has been live cattle as well as lean hogs. Both of those prices are actually going up, and actually did see that at the store as well. So that could provide some of these grocery stores a little bit of a benefit when it comes to the margin level for those particular products. And then also looking at some of the consumer staple items as well. We talked about some of the grains like rice, but also looking at some of the other products that are out there, like Procter & Gamble provides aluminum, things of that nature. So I think right now we're still going to be getting some of that data out here, Nicole, but overall, when you're looking at some of the margins, especially when it comes to the food products, the meat products, it could be a little bit of a tailwind for these grocery stores as we come into the next quarter and start to hear some reports as far as the holiday spending as well as foot traffic.
Sure. Chris, quickly, AI, where does this fit into all of this?
Yeah, it's a good question. I think we have to ask it everywhere. And, it's really important in terms of promotions. I mean, most of my recommendations, whether it's, Walmart or Costco or Kroger, they're all doing something other than simply selling in the moment. But Kroger's done a great job over the years maximizing promotions. If they can do personalized promotions where they don't have to go to the circular and spark a price war, where they can understand, which products are catalysts for people to buy more. Put this on sale, people buy 5 or 6 other items, and then even a Walmart. I mean, the very famous example was, what do people buy during hurricanes? And Walmart famously said years ago that it's beer and Pop-Tarts.
Oh, that's what they buy during hurricanes. Well, those are good staples. I mean, who needs flashlights and things? I'm all about the Pop-Tarts too. Chris Graja at Argus, and Kevin Green right here on the network. Thank you both very much. Good to see you both. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Petalides, live every single day, 11 a.m. and
3 minutes to power hour. Mullen is at 1 billion volume. 1,081,000,000. Mullen above that 16 cents. You actually don't even have an engulfing daily candle with that huge move. It opened the day too high. Could be another one-day pump. I don't know. I like that catalyst though. You're looking for more on some dips. I think, hoping this trend is reversed to the downside on it, with that catalyst being the start of it. Definitely has upside potential. I mean, I think the company's probably going to go bankrupt, but before then. Squeeze the shorts, offer some shares, prolong the bankruptcy. Do it. GME is down 3.3% today. And 5 seconds for power hour. There it is. Starting power hour right around VWAP. So I might just end up chopping a bit. I'll be quick to take profits on any dailies I have. A big spread on those root contracts. Why? $63 on Mullen. Back above 16 cents. Barbecue's up 3%. Really happy with the price action on barbecue. This is looking great for this handle. DWALK popping out there a little bit. 15.25%. Big green candle there. There's another one with a potential catalyst. Wonder if Mullen's borrow fee is going to start coming up.
what that does to stocks, because stocks get uncomfortable and then they get less uncomfortable. This may make them a little more uncomfortable, let's say.
All right, we'll keep an eye on that. So good
Bunch of
day
hedge
for
funds,
the
really?
10-year.
Buying on IP.
Such a good day for UPS. Renita shares off about 2%. Both the shipping company and the Teamsters Union are accusing each other of
premium on
walking
here.
away from contract talks. What's the latest there?
IV's come down a little bit.
Tell you that the heart of this issue, the heart of the dispute is higher wages.
Let's see another
Teamsters
big
want
dump.
higher wages for UPS employees. They also want more full-time
Bump that
jobs
IV
for
up.
UPS employees. They want the company to stop having surveillance cameras in the trucks, and they want more parity, wage parity across workers performing the same job.
West still has pretty high
regardless of
IV.
the amount of time that they've been on the job. But the logistics around this is what has the stock lower today, because since the Teamsters and UPS are essentially at a standstill right now, it could have an effect. It could be a strike, and it could be the largest labor strike since the U.S. Steelworkers strike in 1959.
Oh, sorry.
Teamsters represent around 340,000 UPS workers, and so they're accusing each other of walking away from the bargaining table. Both of them say that they have not walked away from the bargaining table.
Fine, rallying up here a little bit.
It's a very interesting situation because this could impact the economy. We did have one shipping and logistics firm, Pitney Bowes, who says a strike would inevitably lead to a breakdown in the national supply chain, and it would delay millions of Americans' package deliveries. And let's break down how this strike, if it happens, could impact the economy. Now, the logistics
See where it starts to show resistance. This is kind of more bearish, the fact that it's not making this handle quickly and it's kind of consolidating up here at resistance.
Packages a day, and it is about a $154 billion company.
Starting to make lower highs.
6% of the U.S. economy, but let's not forget how this could impact the competitors, which the largest ones are Amazon as well as FedEx. It could put them in a better position. It could take some of the market share away from UPS onto those, but this larger labor dispute is also sending a cautionary message to competitors as we've seen unions become a little bit more assertive at getting these demands met. Now, Deutsche Bank says that on a short-term basis, this could have an impact on the shares, but if this is all settled and done and there's no strike, Deutsche Bank expects the shares to be able to recover and to rebound once a settlement is finalized, and if that strike would be off of the table, Carol.
31 cents on barbecue, 2.5%.
Largest strike since 1959. So definitely having an impact on UPS today. Not so much FedEx. FedEx shares in the green, as we just saw on that chart. But Kev, this makes me think of the Dow Transports, and I realized I haven't really checked that as an indicator for economic strength in quite some time. And it's actually up about 16% year to date. So pretty good sign for the economy, despite the fact that these rate hikes are continuing. At least, one more, maybe two, potentially more.
Yeah, exactly. You know, and first thing, remember that UPS and their union, and you're right, they represent 340,000 people. They have
I kind of rejecting that, yeah. Continue this downtrend on the highs.
If you put this in a Washington, D.C. perspective, they have loads of time to get this done and negotiate throughout the month.
Let's see a new low of the day, Spy.
What you're seeing in the Dow
Let's start filling this gap.
is strength in everything that moves.
You can still do it today. We'll allow it.
One place to another, Caroline. And when you think of what's going on in airline stocks, when you think what's going on in rails and FedEx and UPS and Amazon, all those names that are in the Dow Transports, they're all having pretty good first half of the years, especially the airlines, especially FedEx and UPS that have rallied. Now, UPS is not having a good day today, but all these stocks have done pretty well for the first half of the year. Although, Caroline, I can say that for just about every sector of the S&P 500, as you know.
Yeah, certainly the case. Kevin Hanks, Renita Young, thanks so much. All right, let's continue talking about the macro picture with our first guest. Time to bring in, or our next guest, I should say, time to bring in Stephen Mulholland. He's the Chief Investment Officer of Mulholland Cooper Stock Asset Management. Stephen, thanks so much for joining us.
Thanks for having me, and happy 4th.
You too, or I should say, I guess, happy 5th now, but yes, happy 4th to you as well. All right, so just want to give you a quick chance to chime in on the Fed minutes. Obviously, they were just released a little over an hour ago. Any key takeaways that you're gauging from those?
Well, it's a great question, and to connect to your previous conversation discussing the UPS labor issue and rising interest rates, 10-year almost at 4%. I'll take your question and turn it to a slightly longer term perspective. I was checking the Fed futures market earlier, and the market expects the Fed to raise one more time at their meeting later this month and then be done. Of course, the market had almost a 0% probability.
I thought it was 2 more times they were pricing in.
Cut interest rates the last time he tried to raise them in 2018, so we need to take it with a grain of salt. I will say that you're covering the big issues on the show. The market doesn't believe the Fed is going to keep rates this high for that long, and I think when the stock market realizes that Jay Powell means business, we're going to get the stock market correction that a lot of our guests have been expecting.
Okay, so what does that correction look like? How big of a pullback are we talking?
So the model we use, which looks at the error from high R squared or models with high predictive power from 7, 8, 9 years ago, says the stock market's overvalued. S&P 500, for example, about 20%. So we invest algorithmically at MCAM ETF, and the market would have to fall down now, given the rally of this year, 20% or more for us to allocate based on valuation.
But when you actually take a look at
That's
the
about right.
sector breakdown of the S&P 500, for example, yes, tech was a big winner. There was, it was kind of a narrow leadership for quite some time. We have started to see a broadening out, but energy, healthcare, utilities, financial, all are still lower year to date. Staples are essentially flat. So you wouldn't even dabble into any of those areas of the market that some might not think are overvalued at this point, given the fact that they are still negative?
I would rather own those than the S&P 500. That's been difficult to do. There's a lot of FOMO in the NASDAQ, the S&P 500, the mega cap stocks. That said, while the forward PE, according to FactSet on the S&P, is around 18.5, when you look at RSP or the S&P 500 equal weighted index, it's still almost 16. So we think that when you strip out the NVIDIA and Apple impact on price earnings multiples, or even Meta, which you mentioned earlier, then we're looking for a pullback of maybe 10% instead of 20%. But both seem two things that we don't like. One, overvalued, but two, also carry a higher probability of a large
VWAP, yep. Why are we, or spies?
For our investors, we want to be very careful when the probability is higher.
Beyond.
01 and 08 or a 2020 COVID crash, and our model tells us today that's more likely.
Okay, so we'll talk about where people should put their money instead of equities in just a second. But going back to this 10, 20% drawdown that we could see, that is going to be in response to a Fed that's more aggressive than you think the market's currently pricing in. So how many more rate hikes are we talking?
Well, and it's interesting. We don't even need more rate hikes, right? It's more a question of, so we had 0% interest rates from 2009 until a year and a half ago. It's sort of like the Fed turned off gravity for a decade and a half. They've turned it back on, but investors are still floating. They kind of haven't realized, they haven't fallen down to earth. So I think what's interesting, 20% of the time, since the Alan Greenspan Fed era, since 1988, 20% of the time, the market's had good trends, headed in an upward direction where it's been too expensive on the way we calibrate valuation. That's the environment we find ourselves in today. All the major crashes have happened in that environment. And I don't want to scare investors by any means. And I actually, we still like international stock markets and short-term bonds. But in January of 2004, our model similarly placed us in an overvalued uptrending market. It took 4.4 years, and the S&P rose 7% a year before we all know what happened in the fall of 2008. So to answer your question,
too early, dude.
We don't really need the Fed to do much more other than big cuts. We just
4 years. Timing's everything.
All right. So in terms of those short-term bonds,
If you're right,
say,
but wrong on time, you're wrong.
how short of duration are we talking?
So the 3-month Treasury bills to 2-year notes are the only major asset class in the United States that are actually offering higher than average expected returns. So anywhere from 3-month Treasury bills to 2-year Treasury notes.
So I guess my question would be 3-month Treasury notes, and then what? What do you do in 3 months?
It's a great question. The hardest thing is getting the timing right. It's a lot easier to buy assets like stocks and real estate that have gone down if you're getting paid handsomely to wait. So up until just a few months ago, and some of your guests were talking about this, and it goes to your question of the Fed meeting, up until a few months ago, we had our clients entirely in 3-month Treasury bills. Just in the last few months, we've been extending that to two years. So
Sounds like
I don't expect investors will have to wait longer than those 2
If you
years.
give yourself a 4-year window, I think you'll probably be right 90% of the time.
10-year Treasury in American history usually offers about 5%. Today, as your previous guest mentioned, that's only 4%, while Treasury bills offer over 5% and their average is 3.7. So a really good mix is Treasury bills, 2-year Treasury notes, and then also international stocks, Europe and Japan. Warren Buffett's been buying a lot in Japan. Those markets aren't as overvalued and as big a risk as the U.S.
Even though Japanese stocks are at what, 30-year highs or something like that. So, but I've heard that multiple times that there's still value in Japan. Also want to give you a chance to talk about your MKAM fund. Tell us a little bit more about that. Ticker symbol MKAM.
Thank you for mentioning that. So MKAM ETF is an algorithmic-based investing. We look at 2 variables that have shown efficacy in the past: valuation and trend. So today, as we mentioned, we judge the S&P 500 as about 20. Again, I don't want to scare anybody, so I'll say 10 to 20% overvalued. So we allocate 0% based on valuation, but the market's been in a noticeable uptrend. So we allocate 100% based on trend. We do 50% on valuation, 50% trend. Add it all up, what do you get? We're 50% invested in the S&P 500 today, 50% invested in the treasuries we mentioned earlier. Vanguard's expected return for the next 10 years is 5% per year because of the market's elevated valuation. So we think treasuries are a great alternative. Why do we have some S&P 500? Well, 2 reasons. One, the market can defy the odds for a long time before 2004 and 2008.
Dude, can't breathe the Grim Reaper. Yep.
Allows us to participate while watching our backside. And also, one of the great innovations of the last
All on hanging out,
years,
67%.
Innovated in 2009 is there's a real behavioral component to markets where, at least for now, we're still humans. We haven't handed all of the trading over to the machines. And by still participating in the S&P 500 while having the trend protection on the downside helps mitigate FOMO, which it's really hard for clients to sit entirely out of the market as it's rising. So MKAM endeavors to generate the full returns of the S&P 500 while limiting drawdowns. So we don't ever want to see the 2001, 2008, 2020 drawdowns of 25 to 55%.
Okay. Well, you know, it's interesting. You talk about that 10 to 20% decline that we could see in the market and FOMO. I think that people who maybe have been sitting out this market rally and have FOMO might actually prefer to see a 20% decline as a better entry point. But if we do get that pullback that you're expecting, would you be comfortable putting money to work in equities or at the S&P at that point? And if so, what specifically is on your shopping list, if you will?
Great question. If the market were to go down more than 20%, the valuation part of our algorithm would start to allocate, while obviously the trends would be deteriorating. And so that piece would be reducing our allocation. So if the market fell 25 to 30%, we'd actually end up almost exactly back where we are now, 50% invested on valuation. The returns when valuations are good and trends are good are so outstanding. And the drawdown risk is so great when valuation is bad that we don't mind being patient here and being cautious. From about 2009 to 2017, our model said the forecasted returns were great, and the trends are great. We had that false cycle where Powell was trying to raise rates in 2018. We've kind of been in a 5-6 year play interrupted by COVID of normalizing interest rates. And to your point on where, well, the algo just makes an allocation decision on the broad market. But as a stock picker, which I also have been in my career and still am when I wear another hat, in 2008, 01 and 08 were very different, right? In 01, small cap value stocks did really well. There were really great companies that were valued at less than 10 times sales as long as they weren't .com focused. In 08, everything kind of went down together. So we kind of have to see how the market treats all the stocks. But I loved buying Apple at 8 times earnings in 2012. I'm much interested in buying it today. I don't know, you probably have the multiple. I don't have it in front of me. But last I checked, Apple was 25 to 30 times earnings. So after the 08 crash, MasterCard, Google, Apple, Visa were all tremendously cheap, some single-digit PE multiples. I don't know if we'll get there, but great companies that get sold out with the rest of the market is what would be on our shopping list.
Ace, you might find a seller of those leaps in this chat.
All right, we have to leave it there. Stephen Mulholland,
If you'd like to purchase, you can do exchange.
Thanks so much.
Trades off exchange.
Have a good one. Coming up, Victor Cunningham, portfolio manager.
Change the beneficial owner.
Small cap value fund has some stock picks for us, including Tidewater and
Who needs market makers?
Stay tuned. Market on close. We'll be right back.
Not I. All in, almost back to 70%. Jimmy Meltdown did what? $330. Why rejecting that line we just drew? JH. Still picking up Mullen shares. Dang, dude. Yeah, it's pretty funny. I know, I know that's always, I feel really bad. Really bad for the guy. I mean, I guess at least he knows where he lost his money. Instead of just trading for 2 or 3 years and it just slowly melting away. And not even knowing, like, how that happened. Like, you know, one specific play, you put it all in and, you know, you went all in on red and you lost it. Instead of death by 1,000 cuts where it's like, what happened? I don't remember losing that. No, we're not all adults, Ace. Many children among us. Many man-childs also. Double the barbecues.
Next 3 years, you've seen small caps outperform by 20%, and many of us
Speak for yourself. Dink is the super
and many people
super old, but
2010 period is the lost decade for stocks. But really, that was much more of a large cap phenomenon. Large caps were didn't return anything over that 10-year period, but that was not the case for small caps. Small caps rose 50%, outperformed by 4% annualized.
Dink is not a man-child, though.
So these things go in cycles.
No, I was not referring to Dink.
And this has been, the past 5 years have been extraordinarily difficult.
Barbecue,
for
a little,
small cap stocks, but
little too hot. Oh, barbecuing, low volume, 31 cents, 2.5% up.
All right, let's get to some of your stock picks. First up, Tidewater, ticker
Caroline.
W, petroleum services company. It's actually already had impressive year-to-date gains.
Still no shares showing up on iBorrow for Bed Bath.
Yes, this Third Avenue has a long history of getting involved with securities that went through the bankruptcy process.
Down full of.
We got involved with this company after
Perhaps.
bankruptcy 2017. We remain a top 10 holder as a firm. And it's a company that really replenished their balance
I think it'll come back
sheet.
this week.
Maintain financial strength despite a lot of changes
I don't think.
in the oil and gas industry over that time.
I don't know. It is summer though, but you don't think summers are slower. So I don't know. I think it'll come back. People are too excited. It's been kind of a long weekend. And I've been extra long because we had the half day on Friday and then all of Tuesday off. You can't really count. Can't really count Tuesday. You definitely can't count Tuesday. You can't really count Monday. And even Friday was already pretty slow. But I don't know. We were kind of expecting the day to be somewhat slow anyways.
And in addition to that, the whole idea of renewable
the next 2 days volume should pick up. We have so much data coming out. I don't think market will be able to help itself. Got initial jobless claims tomorrow. That's insane. It'll be a big mover. It's at 8:30 in the morning. I guess I have a short position on it ready. Job openings at 10. Services PMI at 9:45. ISM services at 10. KDP employment 8:15.
SiriusXM, the Atlanta Braves. Why do you like this one?
I don't know. We might be
we
retesting these highs with all that data tomorrow.
Braves piece of that.
440,
We
4444.3.
bought it during COVID. So we bought it in February of 2020 when no one was going to baseball games at that time. The assets are comprised of the Braves, the Atlanta Braves franchise, and all the surrounding real estate around the stadium. And the team has done very well. They won a World Series during our ownership, and they've been arguably the best franchise in the major
Buy
leagues
more
over
Mullen.
the past 5 years.
Mullen.
Real estate around
I don't have more to buy right now. I'll wait.
In Atlanta, and what's changed, and what's really
I bought what I could at VWAP.
Enthusiasm. It's run by John Malone, who many of us know is one of the great value
SMX rallying a bit.
And this was a tracking stock when we purchased it, but later on this month, it is going to be spun off into an asset-backed entity.
21%.
And Malone has a long history of creating value from these securities.
A billion shares. We saw that on barbecue. Actually, see, man.
Possibilities for them to do maybe some type
Care to
of
see it.
merger or something like that. And with all the private equity money coming into the sports.
Oh no, sorry, 962 million.
There is a lot of.
But I think that I don't know. I think some brokerages showed $1 billion.
Up with a lot of assets, and we think the Liberty Braves.
Like AMC back in the day had crazy volume when it inched, squeezed. Yeah, multiple days. 3/4 of $1 billion.
So far this year. So you're doing some dip buying in hopes that they turn.
There you go, 1.2 billion that day.
Absolutely.
On the squeeze on AMC. That being said, did GME do anything like that?
From them. It's
No.
net in our estimation. It's about trading $140 million market cap. They have almost the same in working capital. It's under earning. They've taken some
close though, 700 million.
That as supply chains ease up, their improvement for margins.
Imagine that.
Working capital into cash. Secondly, UMB Financial. The banks have been under a lot of pressure. It's a Kansas City-based bank, high insider ownership, and it's a company that's been around for over 100 years. They've got a stellar credit industry. They've got plenty of excess capital, and we're very confident in their underwriting abilities, as they've shown over time that they can do that. So I think it's getting pulled down with a lot of the negativity around the regional bank space, but we think they're going to be one
40 grand, J Hart. Jeez.
Survive, but do quite well as the industry adjusts to some of the events that took place in the first and second quarter of this year.
All right, Victor Cunningham, portfolio manager at Third Avenue Small Cap Value Fund. Thanks so much for those picks and for your expertise.
Thank you so much. Appreciate your time.
Coming up, Tom White found some bullish options activity around
J Hart from Discord. I don't think he's in our YouTube chat, but he's been buying Mullen all the way down. Like crazy. He's bullish on him fundamentally. So he's got 40,000 shares. The 22-cent average. It's actually almost up to his average. That's crazy. He must have got a lot of shares today. Because he was buying it, I mean, all the way down. Just like barbecue buyers, really. Just buying it all the time. With no trend reversal in sight. Just continuing to buy it, buy. 22 cents. I mean, he's very close to his cost basis. I don't know if he's saying 40,000 shares or $40,000. I think 40,000 shares. He had some big purchases on it though. He said he read the filing. The market cap was 27 million this morning. Now 40 million. And they have 200 million cash on hand. Just closed their first deal and will deliver vehicles finally. They have 200 million cash on hand? What? That's insane. JH, you need to get on voice chat here. Come chat with me about Mullen. That'd be my cost basis too if I bought Mullen. My bullish and barbecue? Yeah. TA wise, looks good. I like it. I bought all I needed to, or all I could, this day and this day. So it's holding up nice. It's doing exactly what I want it to do for this bullish thesis to keep playing out of a cup and handle. And shorter term, little inverse head and shoulders. And now we're just kind of playing around the neckline, which I think will break this week. And might see the 35.70 this week. Maybe higher. Yeah, I'm excited.
Over the last
As far as filings, dockets, all that, I really don't know.
Travel and experiences
I don't know if this company's worth anything. Seems like it should be, but
at this point, Caroline, in over
I don't know.
3,000 hotels. They're expected to add about
Whether it's worth something, whether shareholders have any value in that, are two totally separate things.
Last quarter, RevPAR increased 26% in the U.S. and Canada, North America regions. And then
We sold it at 1750. Nice. Probably a pretty good trade then.
Overseas and international businesses. So this has been one of those hot areas of the market as they've raised prices, but it hasn't.
You averaged up to 15.
Stays across the board.
You're short 240 contracts.
Coming in there.
That's awesome.
Long duration outlook here, using the option market, buying some puts out in the October monthly cycle. Bought 5,000 of the
what is that, 2,400 shares?
Puts for an average debit of
no, it's 24,000 shares.
40 cents. So that break even of 161.60 over the
you have 24,000 shares.
Days. That's about
and you
11% below the current share.
Cover calls on all of them.
There. Now, only 8,000 puts have.
What do you mean you average up to 15 cents?
2.5% of them are just on this one order. Put volumes about 6
times
normal
Mullen?
daily average volume. And the last time we saw the stock below 161 was in late March. So somebody expecting a pretty big turnaround here in this hotel.
We're getting 15 cents a contract.
Capture an earnings event with this unusual option activity also. So that could be a catalyst to the downside if they see any pullback.
185,000.
So taking a look, shares off about 1% right now.
You talking about Mullen?
So get the bearish one
wow,
out of the way.
man.
The bullish trade is for Fidelity National Information, ticker symbol FIS. What are you seeing there?
Yeah, a lot of
how long have you been buying it though, Seaman? All today, or when did you start buying it? When and why?
It was stated that they were looking to maybe spin off its World Pay division. Now, they initially said they were going to spin it off. Now there's private equity firms that are involved. The valuation of this segment of their business is about $15 billion. Would be one of the largest corporate carve-outs ever if it does take place.
Stock doesn't get wet.
Financial Times, a couple of
the difference about this time poison with Mullen, which is the reason why I bought back in, is I traded before and got stopped out because it didn't end up playing out. Difference now is partially TA, partially fundamentally.
And 36% from year ago level.
TA wise, we definitely have the lower lows are slowing down a lot. We were consistently making, this trend, and it slowed down here, and now then it slowed down here, and now the last lower low we made was here. You can see it kind of rounding, and now we've reversed that. Not to say I can't dump, but I'm just giving you the reasons why what time I think is different. Just kind of setting up an inverse head and shoulders now too. Your head down here and your shoulder and your shoulder. All the volume today. For those things, just technically,
the ego on you
is a little different. And then, fundamentally, this is on a catalyst that they hired a law firm. This is what made me the most bullish. What are you doing? Ace, thank you. Thank you for the gifted memberships. Seaman, Sterling Archer, Blue, DJ, Trader Name, Foghorn. Congratulations. Ace has blessed you with his generosity. You are now members. Jump on our Discord if you're not already. And send me a DM. I will give you the happy crew roll.
been bullish on EVs the last couple of sessions after
The
those
ego
delivery
on
numbers,
you.
Thanks, Ace. Appreciate it, man.
reported over the weekend.
Very generous.
And if you look at the mass size of what Tesla did,
Never
as
put the
far as
Discord
deliveries go, 466,000 during the month.
Discord link in there. There it is.
Mustang delivered 8,620 smart EVs.
Yeah, so
that's a 15% increase over the
they had
their P7 is their leader.
what is
as
it
far as
called,
sales
Investor
goes.
Wise, or
Then if you look at some of the new
I
models
can't
that
remember,
they
but they
have
hired the
coming out,
company
they're gonna
to
compete more directly with the Model
look
Y,
into
which
their
is really in
their
high demand
their
over
stock
in China,
basically to
so
see if it's
this might be a catalyst for that. The stock has
a potential
surged
for
another 6% today after
legal
rallying on
suppression of the
Monday's
price.
half day,
And
up
it's
about
been
11%
3
so
months now
far
since
this
they've done
month.
that. And now today they announced that they hired a law firm because they found evidence, enough evidence, they would say, to want to move forward on going after the legal activity on its stock. So I don't think they'd hire a law firm lightly. You know, that's why you go through these steps, starting with them just evaluating your stock at a very close level, to see if it's worth it to potentially hire a law firm, and they've done that, and that was catalyst today. So along with the TA, you combine that with that catalyst that actually popped it up today. I think this might not be a one-day type deal. And then of course the volume, I mean, that's just insane. But I'm not gonna let the volume get me, because the last time I jumped in, a big part of it was that crazy volume, which it was crazy, like 400 million. Today's now 1.2 billion. Yeah, so we'll see. I like the catalyst. I like what it can do. I like, you know, what GNS did, what Hellbiz did, what a few of them did that had that same sort of catalyst, and those hadn't been dumped down nearly as hard as Mullen. And then just what JH was sharing, which is kind of interesting. He's bullish on them fundamentally, so fundamentally I think it's trash, but I haven't looked into it much. But he said he read the filing and said they have 200 million in cash and just closed their first deal and will deliver vehicles finally. So I still think he could probably go bankrupt, but maybe not. Barbecue, a little bit above VWAP there. Thanks again, Ace. Appreciate it, man. If you guys got a gifted membership, make sure to jump on chat and thank Papa Ace. It was Sterling Archer, Seaman, Blue, DJ88. You're definitely a lurker. You've been summoned though. Trader name well deserved. Foghorn, you as well. You're a long time patron. Come thank Papa Ace. Lost money, but I think Bob was a better play. Yeah, I think barbecue. I mean, I haven't really just tried to compare the two, but I think barbecue long term has a better potential. If it has long term potential, I think it's a higher chance. It's just if shareholders have value in that long term. Mullen, I'm not as bullish on, but I don't know as much about Mullen, so that could just be from my ignorance. Reinvested the cover calls into more shares. Sold more calls? Ah. It's like the infinity money glitch. What are you talking about on Passing Cloud? How did you get an average of 15 cents though on your contracts? Oh, average up to 15 cents in your shares. Maybe that's what you're saying. Interesting. 1 billion volume is crazy. I mean, again, I'm not trying to chase it just because of that. We've got about 15 minutes to end the day. Crazy power hour. Not a whole lot. Crazy to see Mullen. Barbecue. Thank you guys for your likes today. Pretty slow day after the long weekend. After Independence Day. I appreciate you guys hanging out, sticking around, hitting the thumbs up. All 31 of you. Got caught around 22, just held. Nice. Yeah, so when I bought up here, when I just looked at the chart and the volume, I just stopped myself out, but I think it's still smarter play to have done that because I think it was above 20 cents. So it still makes sense to have closed it and reopened here at 15 cents. There you go, SPY. There you go. Get my puts back in the money, I'll sell the rest. I swear I'll do it. Still have my shares in the run. Yeah, no, that's smart poison. No question. No question. Especially if you're up on it. Yeah, you bought in today at like 14 cents, right? So if your plan was just a day trade or scalp it, then you did well. If you didn't have a plan, you're failing right away. Even if you made money. Barbecue has been extremely adamant about preserving the NOL. Why do you think that is, Cameron? Most your shares are on 11, 13. Nice. Yeah, that's a great sell. That's basically what I'm doing with barbecue. Almost at 10 cents. Well done. Yeah, I mean, I haven't really been watching it, but it's been kind of flattening out here. From 11 cents down all the way to 10 cents even. But not to say I would have still bought in. Really what pushed me over the edge to buy in was that catalyst. Not the volume, not the TA. Them hiring that law firm. I asked you first. Oh, I just requirements directly dictate that shareholders get value if the NOL is preserved. Well, that's good to know. And they've been working harder to preserve the NOL, you're saying. Okay, now I guess the next question would be what value? Shareholders getting value, like why wouldn't it be where it's at trading right now? Get value of 31 cents on their shares, market cap at 229 million. If this is the oh, what, they upped the free float on Webull. Look, they did it. Oh, really? Yeah, I'm gonna have to start considering that the new free float. I've kind of just said, since there's any kind of confusion, I'll just stick with what the brokerages say. That changes a lot, though. Because wasn't our market cap like 130 million before? This was, yeah, because this free float was like 450 million before. Actually didn't change the market cap as much as I thought it would have. Like it only added 100 million market cap. It's weird. Plus billable hours. Interesting. I want to preserve it. Oh, that's good. Buy ripping there on the 10 minutes of Fugazi. $117 million float. I mean, I don't know, but yeah, I've kind of just stuck with whatever the brokerages say for now until it's clear. Probably won't be clear till it's we're done with all this Chapter 11. NOL would give the buyer a tax write-off, but only if shareholders retain value. Oh, is that what they have in the contracts? I didn't even know. But what's the shareholder value that's retained? That's just a subjective or arbitrage number. But yeah, the NOL I think is a huge deal. Like that's definitely a big perk of acquiring barbecue. Would be that huge tax write-off. I thought it was even over $1 billion. Plus. And there's more. $2 billion over time, but short term. Oh, okay. They said specifically that Overstock and GME are not successors and are thus not eligible to claim the NOL. What? Really? Huh. So they basically confirmed that Overstock and Dream on Me are Fugazi at this point. Don't matter. Or small potatoes. $3K a year. Yeah, but it carries forward. Who was I talking to that said it could be more? I think if you trade your status through trader status, you can realize all those losses. I think that's because I was talking to was it Bipolar? He's a CPA. And he talked to me again. Actually, I want to get him on here. On chat. I should get him on chat. He was saying that, and I was like, I thought for sure you can only realize 3,000 a year, and it just carries over. So if you make more than 3,000, basically, you can't count. Say if you make 5,000, you can only carry over. You can only apply 3,000 of the losses from the prior year, and then the rest just keeps getting carried forward. He was saying no, and I was very confused. I bounced right around VWAP. Let's see. Yeah, that would be huge. That would mean everything we've seen so far, which people speculated and hoped it was non-significant placeholders, whatever you want to call it. That would mean that was all pretty much true. Come on, SPY. Big dump. Let's go. Big dump. Low of the day. Barbecue merged without a buyer for the parent. Barbecue keeps NOL. If they emerge without a buyer, or the baby auction is good, we die and we get converted. Whoa. Microsoft's definitely buying barbecue. Tax benefits are crazy. Mullen up 70%. That's crazy, Cameron. I didn't realize shareholder had retained value for those NOLs to account. How hard they're working to keep the NOLs in there. Trupp, there you go. Trupp's waking up into close. Up 5%. Some volume. Mullen halt? No. Why would it halt? Fine, it's chilling. That was discovered today? Which part? About shareholders must retain value for NOLs? Nothing was released today. Did people just discover it in previous filings? Been over a while. Yeah, it's like all these little details that are just hidden in all this lawyer wording, and sometimes you miss it the first couple passes. You go back through with a finer tooth comb, you're like, wait, what? And figure out what it implies. It's kind of crazy. Alright, first day back in the week. I'll try not to get you fired on a Wednesday. Friday comes though. You might be getting fired. Keep it chill. Chill on the Wednesday. Long holiday weekend. Well, let's see. I borrow desk, refresh. Oh, shares available. Guess what? Borrow fees higher. Bada bing, bada boom. 128 was the high, and that only lasted. I guess that lasted almost the whole day. 130 now. 35,000 shares. It's increasing. 130.8%. I like it. Happiness makes me happy. Yeah, that's good. That's good to see. SPY's coming down a little bit. SPY options I can trade after hours, I think, for like 10 minutes. So that's nice, but pretty far out of the money at this point. All right, there's the bell, silent bell. And let's see, barbecue, end of the day up 2.6%, 31 cents, continuing this nice trend. Nice inverse head and shoulders here. Nice cup and handle formed. Just waiting for the top of the handle to see if we make another reject around 35.70, or if we continue up. If we break that level, potentially we stop out or find resistance 38.79 where we peaked before. But most likely if we break 35.70, I would imagine we're going to fill this gap up here to 44 cents. And see what happens after that. There's another gap at 59 cents. There's another high here at 56 cents. So, yeah, 56 cents might be the next stop after the 35.70 break, which would, let's see here. Which would put us in a bigger cup, right? Just because you have a little cup going on here and a handle doesn't mean you're not forming a much larger cup. So if we reject there, it's either a double top or it's just a cup, and we're going to have another handle with probably support back down to like 40 cents or 38 cents. Have to see the retracement, see what it's saying. So 50% would be 30 cents. So somewhere above 30 cents. You have a lot of room to form a handle there. If the cup was higher, say 60 cents, then you're looking at 31 cents for the handle. The bottom of the handle doesn't have to go that far. Like this handle's not gone down 50%. Gone down, I can't tell, I have so many freaking lines, this is stupid. Like 38%. Wait, what? I thought, oh no, I'm sorry, that's from right here. Whoops. Yeah, it's from that bottom. Yeah, because I thought we did the golden pocket retracement on this cup and handle. So it was past 50%, which kind of unusual, I don't really want. However, that was just a wick. It bounced back up and found support. So I don't think the handle is voided because it's below 50%. I think you just had to dig deeper for it. But we'll find out if it starts to lose the bullish momentum. Then it will have been voided, but I don't think so. I think it's probably still fine with that retracement. BIP guys love the 61.8%. So yeah, everything's looking good still. Looking nice. GME. Oh, that's GM. I was like, GME hinted a green. GME down on the day 4%. Yes, there is a golden cross that's happened, but when you get around that golden cross area, sometimes it dances around there and then comes down. So it doesn't necessarily. It's not just going to keep going up. If it holds above that golden cross range, then yeah, maybe we will see a longer term trend flip into the upside. But at this point, just looking at the chart, it's not looking very bullish to me. I see head and shoulders just kind of chopping. However, we might be forming a bottom here. Whereas the last 2 years, it's actually been in a downtrend, more or less. You've been making lower lows on GME almost for 2 years. Or sorry, lower highs. The lows have stayed pretty flat. And then once we had that death cross here, our lows stayed flat, but they were lower. But our highs continue to get lower. And now our lows are even lower. But we might be starting to make higher lows and higher highs. So kind of seeing that. And that could be confirmed with that golden cross also on on the 50, 200. So might be looking at something like that. I'll actually save those. I like those channels. But this being said, I don't think this means it's going to go to $1,000 a share or anything. I think it's still fixed stock. We still haven't seen it over 30 though, since last time it went crazy over 30. So maybe it goes crazy over 30. With this trends though, I might like to go long if it bounces here again. Because it does look like it could be forming a longer term trend. But this would also confirm that this head and shoulders and from MACD being bearish and everything, that we are still going to come down, get back and bounce off the bottom of this channel, which I don't know, somewhere around here, maybe 20 bucks, 21. Depends on how long it takes, I guess. So yeah, and Mullen, of course, crazy today. 1.27 billion in volume. Good catalyst on this thing. I did pick up some shares. I'd like to pick up more. I'm not able to, and it's not a great time to buy shares when it's up 60%, 70%. So, but Mullen's chart looks nice also. If this holds up any kind of levels tomorrow, then it would appear that it's in potentially a trend up, because all the other days it's had 20 or 30% moves to the upside. It's given back some of it that day, and then definitely next day, or giving it back the next day. I guess here you had like a 3-day move. Let's see, it'd gap up and then come down, gap up and come down. It was evergreen candles. So we'll just see how this one plays out. We start to kind of have green candles and hold higher supports. I mean, the catalyst that they announced today could be the start of that. JH said they had a filing that mentioned 200 million in cash and deliveries that are starting, or new order or something. So 200 million in cash for a company that's worth 41 million is pretty bullish. Pretty bullish on the price. So yeah, this might be the next or another play lining up. Okay, yeah, that's crazy. Thank you guys for your support today. Appreciate it. Mullen after hours. It could, I mean, I don't know. I mean, it's solid right now, up 2.5%. It's actually retesting the highs of the day, which is wild. Yeah. 2 million after hours volume. Oh my gosh, that's insane. 4.6. Yeah, it's crazy. I need to, yeah, get some, close some positions, put maybe some more into Mullen. I positioned today on its very small starter. I picked up some today at VWAP, which I think was about the best price I could. We're looking at it earlier, but I didn't know about that news until one of you guys mentioned it, and I looked into it. We've seen so often this thing just pump with no news. I'll look for it tomorrow though. I think 13 cents, if you get a pullback that far, could be a nice spot to pick it up. Looking at retracements, there you go. 1330 is at 61.8. So might see that, maybe not. Look at that. 38.2 is right here, just about where it started bouncing. So yeah. Thank you guys for your support again. Ace, thank you so much for your gifted memberships. Appreciate it. Thank you, Gerardo and Sony, for subscribing. If you haven't subscribed, please do so. That red button, make it gray. Thank you for your thumbs up. We got 34 on the day. Well done. Well done. Seaman, Sterling Archer, Blue DJ, Trader Name, Foghorn. All new members today. Thanks to Ace. Appreciate it, guys. Thank you for your support. Thank you, Molava. Thank you, Passing Cloud. Thank you, Seaman. Thank you, Cameron. Thank you, MC Production. Thank you, Daniel. We'll see you on Discord. See you on Twitter. See you in the after hours. Okay, peace out.